Mic check. There we go. Woo-wee. Gosh darn, don't you hate when you have those troubles? Well, good afternoon, ladies and gentlemen. It's good to see you. Only can hear my music? Well, how about now, baby? We are live. Things are looking good. How's that? A little better? Well, I'm glad you guys stuck with me. Let me go ahead and just let you know what I was talking. I was just talking to myself, guys. It's no big deal, but I'm glad you're here. Glad you're here. We're going to do another little check on we're going to make sure. Yeah, okay. We got it. Everything's set up now, guys. A little technical difficulties. I guess I should have checked that out before we got started, but hey, you know, not everything's perfect. That's why they say live streaming is hard, and I absolutely love doing it. So, back to what we were saying, if you look at the bottom right of your screen, oh, it's a beautiful thing. We have 59 minutes until, you guessed it, the Fed rate decision. Now, I think we all know that we are expected, looking at the CEM Fed rate tool, we are expected to obviously stay the same. Today on the meeting, our rate change is supposed to be 99.9% sure. According to this, we are going to stay the same, okay? But why is it so important? Why are we all here if we know the Fed's going to stay the same? It's not so much the decision that we're here for, it's the FOMC meeting that's coming 30 minutes after this data gets dropped, okay? So once this data gets dropped, you're still going to see volatility in the market. It's still going to be crazy. People are still going to be anxious getting in and out. But you have to understand. You have to understand, okay? There's still going to be volatility. And then 30 minutes after that, old Papa Powell, he's going to come out, and I have a poll up here. Does he come out? Is he going to act hawkish, or is he going to act dovish? That's the real question. If he's going to act hawkish, that means he is going to be very adamant, like he usually is, but he'll be extra adamant when it's hawkish about things aren't looking nearly as well as we thought. We expected more inflationary rates to come down. The CPI index looks good, but we need to look at the data further. If he's dovish, he'll say things are looking as we have projected them to. Things are looking very promising. Inflation is starting to come down. And then he'll get hard questions like, do you think that you'll cut rates sooner? How many rate cuts do you think you are going to have before the end of the year? And he's going to have to answer these hard questions. He's going to look either good, hawkish, bad, okay? Dovish, good, hawkish, bad for the overall S&P 500. So go ahead and vote on the poll. Let me know what you think he's going to come out and say. And if you look at my screen right here, right now, since we got this back up and running, smash that like button. And if you haven't, you need to hit that subscribe button. I don't know what the hell you're waiting for. I know for an absolute fact we bring you the best content out there. So good afternoon, Muley, good to see you. Dan Bob, the greatest moderator alive, is in the building. B. Stewie, what's going on? You made it. Let's go. Hello, everyone. Yep, you can't hear me, but you can now. That's why I'm going back. Mary, good to see you. I'm glad you're in here. Yep, you guys should be able to hear me now. Music and volume is both good. Yes, please like and subscribe. So thank you guys so much. We had a very rough start, but I tell you this, we have begun. Now, before we go too deep into anything, I do want to point out the CPI index did come out this morning at 8:30, and we need to go over it. If you haven't watched my YouTube short already, this is what you need to understand, okay? In my YouTube short, we explained all of the core CPI. What is CPI? Consumer Price Index. What it measures is the price that we are paying for things. Now, you guys know I like to read verbatim, so that way you get the exact definition. But the CPI came out less than expected, meaning we are paying less for goods than we normally were. And that is the core CPI, which excludes that high volatility food and energy, okay? That came out less. And then your CPI, the year over year and month on month, came out much less. I was really surprised to see 0.0%. 0.0%. That's a beautiful thing. So we are starting to get a little bit of that economic contraction. Things are starting to slow down. Now, what is CPI? The Consumer Price Index, CPI, measures the change in price and goods on services excluding food and energy. And the other one actually has the food and energy in there. So yeah, Covey, what's going on, Covey? It's good to see you, brother. I know you ain't, Covey's watching on the browser. Unfortunately, he can't be with us during the live stream, but you know what? I'm sending you some love, brother. I'm sure you can see that on the chat. Shooting you some love, brother. Thank you so much for supporting my right-hand man, Covey, the man. Ladies and gentlemen, Covey is bringing the heat lately, just coming out with some awesome content. And you know what? Thanks to Covey, we're also going to be getting a little upgrade. We're going to be getting a little upgrade. You better believe it. We're always doing things to upgrade this, whether it is the content, whether it's, you know, one of these cute little things down here, a little Geiger counter, right? A little countdown to the decision, baby. That's always fun to have on there. And then, of course, Covey decide, hey, look, I want to see your pretty face, is what he said. He can't argue with me because he's not in chat. But he said, David, you have the pretty, I'm just kidding. But he said, look, we got to get your webcam up. We got to get more light on that ugly face of yours. So what I'm sending you out of camera. And that's exactly what he's doing. And that is what business is all about, baby. So Adam, I appreciate you. Big things to come, guys. Big things to come. We're upgrading. We're growing so stinking fast. You know that we're growing fast. You guys have seen the Discord meetings. Last night, I think was our smallest one. I think we still had 10 people in there. You know what I mean? And it's amazing to watch this progress. So what are we doing here today? The Fed rate decision comes out in 53 minutes. Then 30 minutes after the Fed rate decision, after the volatility starts to slow down, old Daddy P comes out. He's going to turn on that mic and he's going to drop it. Hopefully it is for a good reason, right? Every time he comes on there, the volatility gets absolutely bonkers. And I'm glad you guys are here to watch it with me today. So it's going to be a good time. I think we're all going to enjoy it very, very much. Now, before the meeting starts, so the next 53 minutes before the decisions hits, we can go over a few things if you would like. If you have any tickers that you want me to go over or any analytics, just make sure they're high ADR and they follow a good trend or a base break. So that way we're not wasting our times with anything too slow. Now, we can go over my trades really, really quick just because we are in them. But before we do, we need to look at the S&P 500. The S&P 500 right here, when that CPI data dropped, like the Beastie Boys would say, dropped, right here is where that data dropped. 537.68, that data dropped and it was hot, baby, hot. This is like a flapjack, man. You got to flip it, stick it, see you later, bye. This thing rip, tater chip to the north side. You got to love it. You have to. I mean, if you have any type of investment vehicle, you will know for an absolute fact that you have made money today. You went from 537 to we're sitting at 542. Okay, you almost made $10 on every share in the S&P 500. Let's run through this, guys. Look at this. Data drops, it rips to the north side, and it holds that gap. Very important. If you look at the daily here, let me just zoom in on the daily. Look at this daily. If you zoom in on the daily, look at that gap. If we can hold that gap and continue higher and push a little higher and then trade sideways for a little while, make another base kind of like this, that's going to be the biggest bull sign you've ever seen, okay? A lot of people say, well, we have to fill those gaps. We have to fill those gaps. Well, what about this gap? You think we're still going to come down here and fill this gap anytime soon? Look at this beautiful gap. That's what we're getting up here, another beautiful gap. That gap was where? Right where we talked about it in the Discord, that $500 bounce, the psychological and technical area of 500. We bounced, we have a gap, and that gap is still sitting there like the front of some people's teeth, okay? Now we have another gap after we bounced off this 10-day moving average. Rising 10-day, rising 20-day, we are strong, baby. And I'm very, very proud to say it, and I'm very happy you are here with me to see it. Now, with the FOMC meeting coming out and the Fed rate decision, we're going to see a lot more volatility. I'm not saying we can't come down and fill that gap, but what I'm saying is if we continue to hold this gap, it's going to be a beautiful sign for the overall market, just like we have been rooting for it after this 6-day bloody sell-off, okay? So the S&P 500 is looking good. We'll look at the IWM. This is the Russell 2000. I told you this was my concern, was the Russell 2000, because this small and mid cap here, it bounced, okay? This is your small and mid cap. It bounced. We're back up towards those highs, back up into resistance, okay? So we need to be careful with this, knowing and understanding that if we don't see continuation on this, at least we're above a 50-day moving average now. I hated the fact that we're below that 50-day moving average. Now, another thing I love to look at, you guys are very aware of it, is the RSP. Why? It's the equally weighted S&P 500. It doesn't matter if the S&P 500 is looking good. That could be tech dragging it up, which we know for a fact tech is definitely dragging it up. If we look at the QQQs, you'll see that it is at a new all-time high with the S&P. But the QQQs is not equally weighted in the S&P 500. Why? Let's look at the market watch list. This is your S&P 500. If Nvidia, Microsoft, and Apple are all rip, tater chipping, well, that's information technology. That doesn't mean healthcare or consumer discretionary or industrials doing very well. No, that just means the overall S&P 500's technology area is dragging the market higher. We want to see the overall market heading up higher. So that's why we look at the RSP, because the RSP makes these equally weighted. It doesn't make this side any bigger or stronger than this side. It makes them all equally weighted. So we look at the chart and we can see we have finally broke back above that 50-day moving average. We're above a lot of this resistance here, and we're gonna be heading back up to this 167 in my opinion, okay? Now, I could be wrong. This isn't buy or sell recommendations ever. Look at the description. This is a pure entertainment show, but as entertainment, I'd love to see the wins, guys. I love to see the wins. We love to see the watch list that we've been creating for you. It's been absolutely amazing to see just how well everybody has been doing since we've been coming out with these watch lists. So if you want to be a part of that Discord, or if you want to be a part of the watch list when we don't air it on live, you can join the Discord, and Dan Bob Dan, the greatest moderator alive, will be happy to throw that in the comments section if you would be so kind, Sire Dan Bob Dan. Just so if you guys aren't with us already, which I'm sure that you are, but if you're not, you're more than welcome to do that. And while we are here, before we move on to the trades that I'm in, because we only got 48 minutes until that data drops, what I'd like you to do is I'd like you to go ahead and click on this live button. If you notice on my screen, this right here, I am not live. I'm not live. So we click the live button. It brings me right to where we are at right now, okay? We want to make sure that we're live so that way when the data drops, you're getting it right here, right now. And then, of course, smash this like button, guys. Smash that like button. Hit the subscribe button if you haven't already. And then there's a poll over here on the right-hand side, or it might be a little different on your phone. But I would love to know what you think. Will Daddy P see more hawkish or dovish in his speech? Okay, let me reread that. Will Daddy P see more hawkish? Hopefully you guys understand what I'm trying to say. Seem more hawkish or dovish in his speech. Hawkish, bad things to come. 10% of you think. Dovish, 40% of you seem to think dovish. And you said, I don't know what kind of bird this man is. You know, I mean, it's okay. If you don't know, understand hawkish or dovish, that's totally understandable. And I'm glad that you're not just trying to take a guess. There we go. Dan Bob Dan put the Discord in the chat. You're more than welcome to click on that link. Everything's free, guys. Everything is free. Why would I ask for your money? I can make my own money. You guys need it. You need it for free. And I am so sick of all the people out there trying to take your money, trying to sell you some kind of course or something like that. It's just not, it's not plausible. You don't need to sell a course if you know what the hell you're doing in the market, right? All right. So join up. Let's work together. Let's find the trades that we need to trade, okay? So everything's looking good. The RSP's looking good. The S&P 500's looking good. The IWM's looking good. The QQQ's looking magnificent, magnifico. Let's take a look at the trades that I'm in. We're going to start with the only slow trade that I have taken. The only slow trade, because it was just such a beautiful base breakout, I decided to take this yesterday right at $6.09. Now, I didn't take a lot just because it's a slower mover. We're only up $67 on this trade. It's chump change. We're just holding on to this. It pulled back a little bit today. It's looking a-okay. If we restore these sells, we can see it's a slow mover, guys. This thing only moves 3.5%. I look for things that are 4% or more. We want to see 4% or more when it comes to these trades. All right, why? Well, because we want to make the most money for our buck, especially if you have a smaller account. If you have an account that's less than, let's say, 10 million, okay? Every time I say this, it goes up. But if you have an account smaller than 10 million, we are looking for the fastest moving trades, the most liquid, the fastest moving trades, and we obviously want to find the base breakouts or the trend breakouts. The only other thing, episodic pivots, okay? And we studied all that last night in the Discord. Now, the next trade is Abercrombie & Fitch. Abercrombie & Fitch, it moves 5%, so it just met my criteria. You can see on the daily here, we actually took this trade after the trend had broken out. When it broke out, I decided to enter the trade around 171. Let's take a look at the P&L here. On the total trade so far, we're up $1,373 on 3/4 of this piece. I've already exited a quarter of my position out at 178.35. A beautiful win, but I like to pay myself and let the rest ride. Where is my stop loss? Well, currently my stop loss is sitting at break even, but because the 10-day moving average has headed up higher than that 10-day, then my break even, I can now start to bring my stop loss up. So now I'm starting to bring my stop loss up, meaning that every day that this stays above the 10-day moving average, every day I can move my stop loss up. This is called a trailing stop loss. I would like to see this have the same potential it did from back in the day. Look at this. Huge leader, held the 10-day, pushed up higher. I would like these 100, 200% movers, okay? I would love to see this thing hit 300, of course, before I decide to get out of it. So I want to give it that opportunity to do it, okay? I've already paid myself a small chunk. We're up another $1,374. And Purpleville just joined the Discord. Thank you so much for joining. We will have, let's see, today is Wednesday. So tomorrow we will have a meeting, but the meeting is actually live tomorrow, I believe. But we'll talk to Dan about that. We want to make sure that he's got the schedule. He keeps all the schedule going. You know, we got so many people on this team here that's just doing so many magnificent. Just shout out to you. Shout out to you, Adam. Shout out to you, Covey. Shout out to you, Dan, Dan. I know it sounds like 8 people, I just think, but it's really just 2 that are just kicking ass behind the scenes, taking names, and making that money. Next up is ASTS. We have a little bit of a pullback today. We're still up around $632 on the total of this trade. Today, we're actually only down around $44 on this. Yesterday, I actually added into this trade. So keep in mind, guys, we are here for the Fed rate decision. It will be going off in 42 minutes. 30 minutes after that, you better believe it, baby. We got the FOMC meeting. That is why we're here, so make sure you stay tuned. 42 minutes, 38 seconds. You know you love a good countdown. You know you love a good countdown. It keeps me attentive and focused as well, so that way we don't slip up and miss anything. We are here for you. You're gonna hear it here first, and you're gonna hear it fast. So ASTS, this is in the communication sector. If you guys weren't aware, the communication sector was very hot and is still very hot, okay? So now if we look at this chart, you'll see yesterday I added into this position. Let's first take a look at the daily where I took it. You can see this downtrend. I actually took it with a downtrend within a downtrend. I took this trade at 786. It was a little extended, but I liked the trade. I decided to take a small amount, about 900 shares. I exited 300 here, 300 here, and I held on to 300 through all this volatility. And then if we zoom in to the daily time frame, you can see I added at this yellow area another 100 shares. So now we're holding 400 shares. Why did I add? Well, if we look intraday, you can see this beautiful trend break on the VWAP. So when I seen it bounce and wick on this VWAP here and it started to break out, I added 100 shares into ASTS. So now we're just holding on to this and we're gonna let this trade work out for us, and we're still going to use this 10-day moving average. So right now my new average on this trade is $8.17, holding 400 shares. We're up around $644 on that. So we're gonna see how well this wants to do. I'm bringing my stop loss up each day following this 10-day moving average, okay? Things are looking really, really good for ASTS. Grab a drink here. All right, First Solar. You guys were with me here yesterday when I decided to take this. I tried to take First Solar one time before when we had a trend breakout. We were playing this trend breakout right here, and I played it, and look at this. It stopped me out. It set back up. I reset my trend to see where this should land, and sure enough, it broke through, and we decided to take, I only took 10 shares on this, guys. I only took 10 shares so that way I could risk this low of day without sweating it too much. I only risked $100 just because I had been stopped out before. Now, this is a beautiful runner. You can see huge volume on the push-up. It pulls back. It gets tighter. It's not nearly as tight as I would like to see it, but it ran, and this thing continued to run. So we're up around $233 total on this trade. So I think we're up quite a bit on our trades. Things are looking good. Yes, we are meeting tonight, actually, at 9 p.m. tonight. Thank you, Dan Bob. I appreciate that. Yeah, so tonight, especially you, Purpleville, who just joined our Discord, we will be having a meeting tonight at 9 p.m., okay? It probably won't be the longest meeting tonight. They're usually around an hour, but we'll probably just open everybody up to questions at 9 p.m. Eastern tonight, because there's going to be a lot of questions about what happened in the overall market, the FOMC meeting, and obviously the Fed rate decision, okay? And so tonight, that's what we'll go over in the Discord. All right, so before we go check on CVNA, I just want to take another look at the SPY really quick. Here's the SPY. You can see, look at this. This is the kind of trends that I'm looking for on the 5-minute time frame. See this? Look at that. Bounces off the VWAP and then breaks through. So it looks like we're going to have continuation to the north side. Now, I could be wrong. These aren't buy or sell recommendations, guys. I'm just looking at the overall market. I'm making an observation using technical analysis. This is an ETF. The intraday technical analysis on these ETFs don't work out nearly as well as on the daily, but I just wanted to point that out so you guys can actually get a better eye for these trend breakouts, okay? So the S&P 500 is looking good. Now, we have a chat from Muley. Muley says, can you check out CVNA, please? You're darn tootin', I can check out CVNA. So when I look at CVNA, first thing I see is this huge downtrend here, right? It's not holding much of the moving averages, but you could consider this 30-day moving average a hold. So I do like that. And look, the last time we had a trend, it broke out, right, on earnings. So a big pullback here. It looks like it's trying to hold this area. It does move 5.3%. So Carvana is a stock that I would consider in play, okay? I have my alert for this base break. This base break no longer holds any weight unless it does get back up here and retest it multiple times. But yeah, Carvana looks like a nice in-play stock. I would definitely keep it on your watch list. I would like to see this thing tighten up or form a base down here. This base breakout was a little off-putting just because you're not getting tight on any moving averages. You're slicing through all these moving averages and you're heading higher. But right now it's currently sitting at 108.93. It's forming up. It's making new higher lows as we speak. So things are looking good for CVNA as well as a lot of other stocks. You guys have to keep in mind, if you are in a stock or a trade right now that is not looking all that pretty, let me move this over so we can see it. Surprised nobody brought that up. We'll put this right here. How about that? I want to make sure you guys can see this stuff. I was looking like my face was right in the way of that timer. Oh, that's good stuff. But yeah, if you guys are in a stock and it's not holding up well, while the S&P 500 is ripping to the north side, then you're not in the right stocks. You're in weak stocks, okay? So just keep that in mind. We want to make sure that you guys are in the strongest stocks that are out there. High RS rated stocks. And we can actually go ahead and bring up my trader view too, and we can take a look and see what Carvana is sitting at right now. So CVNA, we can take a look. The RS rating is 99%, okay? Look at the RS rating right here, guys. That RS rating is extremely high for CVNA, okay? So it looks good. You know, I'm happy with it. I'm happy with the RS rating. I'm happy with the average daily range is over that 5%. That's what we're looking for. And it looks like it's shaping up, creating new higher lows. My only issue is if I didn't take it on this trend breakout, I have to wait for another base breakout or an intraday trend breakout, just like I pointed out for you on the S&P 500. All right? So there is your analysis, Muley. Muley. Let me grab a drink, y'all. Yes, we got 35 minutes. 35 minutes till that Fed rate decision. That Fed rate decision, y'all. Very important. It's going to be a very important time. Let's see here. Let me go ahead and send this out. And Dan Bob, if you do me a favor, send it out in the chat with our friends Robinhood Stock Market Watch List so they can join as well, please. I would appreciate it if you have time. If you have time, it's not that big of a deal if not. But yeah, guys, we have about 34 minutes left till the data drops. It's going to be a good time, I promise you. And if it's not, well, you don't have your stop losses in, okay? It's going to be a good time because if I get stopped out, hey, I know that I'm already taking profits. I've already made my money. If I stop out, that just means the trade's over. Then I have more PP in order to go ahead and buy other things. Right now, I have roughly $45,000 out there, and I have $15,000 sitting on the side for cash. I've decided, I actually talked it over with a good friend of mine. Instead of trying to buy more trades than what I'm already in, my best bet is to add in the trades that I'm already in. Okay, so if we get a pullback from Abercrombie and Fitch, which is doing absolute beautiful things for me today, I mean, just today, I've made $400 on this trade. We're up almost $1,500 total on the last 3 quarters of this stock. What I would like to see, because we're so extended from this 10-day moving average, is if it can pull back. If it pulls back, holds the 10-day, I'm probably going to add into this. There's no point in me, trying to sell or buy more now. I'm waiting for that pullback. So maybe this meeting, he comes out extremely hawkish and it pulls back, scares investors a little bit, and then we bounce off this 10-day moving average. Guess who's buying more? This guy. As long as we hold up and things are looking positive, things are looking still well constructed, then I will be buying more. So instead of taking that last 15,000 of my purchasing power, I'm going to use it to add it into trades. Now let's look at NVDL. This is one trade I didn't go over. So this is NVIDIA, guys. I bought this after earnings. You can see down here at $50 I bought this, and I'm still holding 1/8 left of my trade. This is beautiful. If you guys did not think that NVDL or NVDA for this matter was a strong stock, you need to really, really second guess all of your thinking and logic, because it has not only been a strong stock, but since 2023, this has been a leader in the stock market and all eyes has been on NVDA. So we took this at that $50 area, and you can see we're all the way up here at $73.87 for NVIDIA. So things are looking very, very good for NVIDIA. Let's take a look at our friend MU as well, because we know that there was a trend breakout here on MU. And I think there was, I forgot who called it out in the Discord. Let me know which one of you called it out. Oh, ASPN, we could take a look at that for sure. So ASPN, I actually stopped out of this. And I would have stopped out this day anyway, so I wasn't too far off. But ASPN looks like it's setting up a base, doesn't it, Dan Bob? Let's go ahead and mark this base out for you guys. So this looks like a base that could be a base breakout here. So that's a good eye, Dan. I appreciate that. And this is Aspen Aerogels. And why is this so important? Well, because they had an episodic pivot down here on this day. They had a huge surprise on their earnings and their guidance and their sales. So this ASPN, Aspro Aerogels, really started ramping up and created this beautiful trend break that we called out in the Discord, and then this thing started to head higher, right? And we played this out for a little while, and you should have never stopped out until you were at 29.16. So that would have been a beautiful trade here. Let's just take a look. If you would have got the perfect price, which I did, and stopped out, you would have made 6% on that trade. That's beautiful. Now it's setting up again, a nice base breakout here. And I just had an alert go off. Let's go ahead and see what MSGM is going on. So MSGM, if we look at this on the daily, you can see that it's got this huge downtrend here, right? It's under the 200-day moving average and just got above it. But let's take a look at the RS on MSGM. So this is great to have a real-time alert go off because right now we see the RS rating, it's at 54. That's a pretty garbage RS rating, but I still have this marked out because I really like to see this type of trend line trying to break. Plus there's volume backing it up. So am I going to go against my rules and say, hey, maybe I'll take this because the RS rating? No. But what I will do is I will reset my alert right here so that way I can reassess the situation at a later time. So I do like the look, the structure of MSGM, but it's not a relatively strong stock compared to the rest of the market. So I'll just keep an eye on this. Let's head back to the S&P 500. Muley says ANET. Let's take a look at ANET. Yeah, so ANET, look at this beautiful trend break. So I marked out this trend break for us a while ago, and we were talking about ANET for quite some time. I also had my alert for ANET go off right here because I seen that it was forming some resistance here at that 301, or we could even say the psychological area of 300. Now, that was where the trade was at. I did not take ANET because it is a slower mover at 2.7% average daily range, okay? So we passed on ANET, but if you're into those slower movers and you're not willing to make millions, we had a huge overview on Christian Quilamagi, and so I'm kind of talking like him because we just did a really deep study last night. And if you guys haven't watched it, you can go back and check the videos. It was just uploaded last night, so it'll be easy for you to find. But yeah, Christian Quilamagi, he definitely gets you talking like him because he's very, very adamant. You know, if you don't want to make millions, then play this stock. You know, but no, it was a very good good trend breakout here. It held this 30-day moving average very, very nicely. I like the look of it, and just as we came down, the 10-day moving average started to curl up right before the breakout, and you could have taken it around that $300. So now it's up. It's up on less volume, which some people can consider good because that means it's trending. It's not over volatile, and this thing's heading higher. We would like to see it break out on higher volume, which it did relative to the past week, but now that it's heading up, we still have the rest of the day to see what happens with the volume, but it is looking very well, Muley. I like that. Did you take that, Muley? Did you take that? Can you check if ANET is still good buy on dip? Okay, I see. So yeah, we are a little extended on the 10-day moving average. I mean, I can't give you buy or sell recommendations. Obviously, I'm not a financial advisor yet. I am really thinking about it. I am really thinking about becoming one. I just don't want to have it take any time from my YouTube or my trading. But maybe if I study the books on the side, we can do that. We can become a financial advisor on this show, and I can give advice. You know, I can give advice. But right now, I can't give you advice. So you sold on profit, okay. So I'm not sure what your average was or where you bought, but what I will say is this. It is trending to the north side. It never broke this 10-day moving average after where I would have purchased it, so it's still in play. If it pulls back and retests this area of 301.43, that's going to be, in my eyes, something that I would want to keep a closer eye on. So this might be nice if it pulls back and it wants to retest its breakout area. That would definitely be something I would want to keep on my watch list. The Fed rate decision, ladies and gentlemen, is in 26 minutes and 50 seconds. If you're not aware of the Fed rate decision, well, they're expecting a rate stay. The rate stay at 5.5%, okay? If we stay at 5.5%, we are still going to see volatility. 30 minutes thereafter, so in less than 1 hour, you are going to see old Papa Powell come out onto the stage. He is my guest speaker today, or should I call him P. Diddy? No, not P. Diddy, Daddy P. I just called Papa Powell P. Diddy. That's not cool. That's not cool. But no, Daddy P. Old Daddy P. Since Amazing Art calls him Daddy P, I like that better than Papa Powell. So our Papa Powell, our Daddy P, will be coming out in less than an hour, and he's going to pop the microphone on. Usually, back in the day, he would turn on that microphone, and you just watch it drop. You know, watch the market just completely fail the second he would turn on that microphone. Lately, it's been a little different. because the CPI data has been lower, your unemployment has been higher, you've been seeing there's economic contraction in the overall data, okay? So it's good to see the economic contraction because it shows that his rate stays for so very long have been working. That's what he wants to see. He wants to see unemployment not get to a point where it is an issue, but he wants to see it get to a point where there is less spending. Because if there's less spending, people, that means there's less demand. If there's less demand, that means there's more supply. If there's more supply, that means prices can come down, right? That's what we want to see. We don't want to see this inflation continue to stay rampant. We don't want to see it continue and get higher. And you can start actually seeing it now. The price of things are actually coming down. I've been seeing it on my Twitter account where people are posting, hey, prices are actually coming down. Like you're actually getting the effect. You're actually starting to see inflation start to slowly come down. That's a beautiful sign. And we actually got that. We can actually see that for ourselves right here. Right here, you can see it for yourselves that the unemployment data is showing that we are paying less for our money, okay? Now, one thing I gotta see, okay, that's ready to go. I wanna just double check that though. We wanna make sure that you guys are gonna get everything first and foremost. So I gotta stay up to date and hit my refreshes. Let me grab a drink while we're doing this. Oh, it looks like we're live. We are live. Well, look at that. So what I'll do is, because it doesn't have, it's still got some time, but I will throw this up here for you guys so you can see just what's going on so you don't think that you're missing out, because we know fear of missing out is real. It's a real thing, and we don't want you guys to have any fear of missing out. But the first thing I want you to do before I put this up is go ahead and take a look at my screen really quick, guys. I would love for you to make sure you click this live button. We want to make sure that you are live. If you're not live, you're not going to get the data first and here now, okay? Hit that live, hit that like button, and smash that subscribe button. Now do a quick refresh to see where we're at. Let's take a little peeky gander. We're up to 11 likes. That's a beautiful thing. Let's see if we can beat our 30 likes. We have 30 is our goal to beat. So if we can get 31 today, that would be absolutely awesome. If not, hey, no big deal. And I'll send some love your way. I see you guys hitting that love. Thank you so much. I do appreciate you guys as much as I possibly can. So thank you so much. Now we have this up. They're not really saying or doing anything. Not me. We don't want to move me. Let's see now, where did I put it? We'll bring that up in just a minute. Hang on. There we go. So we'll just throw this right here. I think that looks pretty good. And let's see if I can keep this out front. See if I can figure out how to do that for you guys. Oh, you can actually see what I'm doing here. That's funny. Let's see. Organize similar tabs, move tab to another window. Maybe I don't know how to do that, but they're not doing anything right now. We'll bring this back up for you guys once they actually go to do something. They're just, all it is a whole bunch of
sure that consumer and community voices are heard at the central bank.
Yeah, they're just talking about the central bank and how it works together and yada, yada, yada. Nothing we need to hear right now. The real important news is coming out in 21 minutes. And then thereafter, shortly after, you know, old Papa Powell is going to come out and start talking. Predator, what's up, man? Yeah, all in due time, baby. All in due time. Yep. But we're up to 11 likes. We only need 20 more, and we're going to beat our beautiful, beautiful record. The S&P 500, let's take a look to see what it's doing right now as it's pulling back, retesting that VWAP area. We're going to see if it wants to hold. As you guys can see, we had that trend breakout, but as I said, ETFs, it doesn't really count on ETFs, and either way, you know, with this Fed rate decision, you're going to see this 542 get left in the dust. Whether or not you like it or not, we are going to get volatility in this market. Now, I've seen times where the market comes out, and even though they have a rate stay at that 5.5%, you're going to find out right away that sometimes we might break on down, scare a bunch of investors and come right back up and sit and trade sideways. Sometimes we might head on much, much higher than where we're at and then pull back and end up in the same spot we were trading. Sometimes it's just how the market works. They use the volatility either for or against people. So do keep that in mind, okay? But I promise you, you will see volatility. You will see volatility in this market. And that's why we're here. We are here for the volatility. We're here for the action. We're here for the news. What a great time to be alive. I can listen to David and grocery shop at the same time. Dan, Bob, Dan. That's what I like to see. Grocery shopping. Yeah, hopefully, tell me, how are the prices looking? What's the price of eggs there? What's the price of eggs there? Are they coming down? I mean, according to our CPI here, it's showing that our forecast for our year over year was 3.4%, and now it's down to 3.3%. I mean, that is an absolute amazing thing, guys, to see that year over year came down. It's also really nice to see that the core came down. This is excluding those volatile prices of food and energy. That came down, right? And also the month over month. It's so good to see the forecast was 0.1. The previous was 0.3, and we're already down to 0.0%, okay? So we're not seeing inflation. We're seeing deflation. You know, technically it's not deflation because it's not a negative CPI report, but it's still looking really, really good. It's really nice to see this, guys. It's very refreshing. And if you guys weren't aware of it, our September Fed rate tool went from a 43-ish% as of this morning before 8:30, and then that CPI data dropped, and you can see we went from 43-ish% to a 61% likelihood that we were going to come down a quarter of a basis point for the Fed rate cuts in September. That in September we are actually going to cut rates, and that is why the market stormed to the north side. That's why when the data dropped right here, people, look at this. Right here, team, look at this. Beautiful. That's because that CME Fed tool changed immediately. When you see that we go from being held down and pulled back, you know. Oh, you're actually doing it online, Dan Bob? That's very cool. That's very, very cool. Yeah. They don't give prices? The website doesn't give prices? Man, you're a baller. You're buying without any price tags? That sounds like a Nicki Minaj song, you know? She buys it without, who looks at the price tag? You guys probably don't know what I'm talking about, but that's all right. She goes, who looks at the price tag? Not Dan Bob. Dan Bob's not looking at the price tag. The S&P 500, though, sitting at 542.64 right now, still above the VWAP area, still above yesterday's close, which, guys, it's hard to believe that yesterday's close was right here at 536.91, and now we are currently trading at 542.64. Holy guacamole. Can you believe that? Can you believe that? We've jumped $10 overnight, guys, and we're holding that gap for now, you know? It's a beautiful sign. Beautiful sign. Yeah, Dan Bob, I see you. It's good. It's good. Yep, but yeah, no, guys, this Fed rate tool is absolutely amazing. You know what? I'm going to do you a solid right now in case you guys want to use this. I'm going to throw this up in the chat for you. There you go. So this is the Fed rate tool. I use this constantly. I really want you guys to save this to your web browser, okay? After any data, this is what I use. This is what I use to help orchestrate whether or not this is positive for the overall market, right? Because we want to see Fed cut rates. Why? Because then it is easier for us to borrow money. That's for companies and for you and I. If you and I can borrow money easier, that means you and I are more likely to go take a loan to either add on a new addition, which is going to be more money for the builders, right? It's going to be more money for Home Depot. We're going to a lot of people buy cars. I think that's a huge wealth killer, buying a new car. But say you need a small car loan. Let's say you're going to buy a $5,000 car, not a $35,000 car, but you're going to go buy a car loan, right? So what do? You take that money, right? And you go to the bank, you get the rest of the money that you need, you take a small car loan out for $5,000 or $10,000, whatever it is, and then you go buy the car. Now either the car lot or another person is gaining that money. Now we're seeing money get exchanged, right? We're seeing money go around. So if it's easier to borrow money with the Fed cutting rates, then it's going to be easier for us to spend money because we have more money to spend. And you know that more money that you have, the easier it is to make money, right? And that's what people do. You need money to make money, is what they say, okay? It takes money to make money, I think, is what they say. Somebody said something about something somewhere. I promise you that. So, yeah, but guys, you know, at 61.3%, that's the highest I've seen the Fed's percentage to cut rates 1/4 of a basis point in September. So that's really nice to see. And that was all because of this forecast on the economic calendar on the CPI index. So the forecast at 0.3 and it comes out at 0.2, huge news. But what I think the biggest news was the month over month, where the previous was at 0.3% and we've came all the way down to 0.0%. We're almost to the point where we're in a deflationary area. And what do I mean by deflationary? Let's look at the inflation tool, okay? And we can look at past data and you'll find out some pretty cool stuff. Let's see here. Let's see, tough. Hang on one second, guys. Let me just get this up to my buddy here. There we go. So if we look at this inflation calculator, this is what I love about this too. And you guys can use this too. Everything is absolutely beautiful that I use because when I give it to you, it's free. That's the best thing, you know? So check this out. We scroll on down, all right? We look at 2024 and you can see the inflationary data. But if we go back, let's go back some years here, okay? We had the financial crisis of 2007, and you can see the inflation started really ramping up here, right? And then they brought on, you know, a lot of different things to help fight that inflation. Look at, we had deflation for quite some time. So just after the 2007 the market crash, right? The financial crash, the hardships that we had, you can see there was times where we didn't even have inflation. We actually had deflation, which was absolutely beautiful. All of 2009, look at this, guys. Almost all of 2009 had deflationary inflation rates. That's a beautiful sign. So we're almost to the point where in the CPI, we almost shown that we are actually coming down in price, which that's what, you know, if Papa Powell's seeing that, he's gonna wanna slash those rates. So on top of all that, the annual inflation rates right here in July, when we get those in July, we'll get the June, okay? We'll get June. It'll be available July 11th. We'll get the June prices, okay? Because we're always looking a month behind. We have to figure out, collect the data, and then it gets released. And speaking of getting released, the FOMC, I'm sorry, not the FOMC, but the Fed rate decision is actually getting released here in 12 minutes. So definitely keep that in mind, guys, 12 minutes here. That's gonna be absolutely beautiful to see the volatility coming in this market. Even with the market pulling back, I can see just by looking at my P&L that the stocks that we're actually in right now, the relatively strong stocks that we're in right now, are still heading to the north side. That's why we always preach finding the relative strong stocks. We want to be in the relative strong stocks, right? What do I mean by that? Well, let's look at this. Let's look up ANF. That's why I'm in ANF, is because look at the RS rating on this, guys. 99. It doesn't get any higher than 99. We want to see those relative strong stocks. Now, I just had an alert go off for EGY. I love doing this real time so we can do a quick understanding of what we were looking at here. So EGY is a very volatile, well, it's actually only 3.5, but we're breaking new high, more recent highs at 6.59. I don't see a trade on this though. There's no real base breakout or trend breakout on this, but EGY is an energy stock, so that should show that a lot more energy stocks are actually starting to take a bid as well. So with the overall market heading up, it looks like energy is also heading up. And with energy, we can look at like XOM. It looks like XOM's heading down, that's gas and oil, but EGY is heading higher. So EGY, we can even look into more of why EGY. We can look up EGY and we can see, well, is this a relatively strong stock? Let's take a look. 96, yes it is. Energies and mineral, okay. Integrated oil, what do? Well, we can scroll down here and read this on the trader view. Energy engages in the acquisition and development of production of crude oil, okay. So they're a crude oil miner, or they try to find those crude oil, focus on offshore eminent marine permit operations. Okay, wow. So EGY here is starting to head up higher, and it is breaking out on a little bit more volume than I would expect. So that looks good, but not a trade. It's just an old alert from back in the day. So the S&P 500 finally breaking down that trend-based breakout. I want to take a look at Tesla though, because Tesla, I had the fear of missing out right up here. I really did, because I missed my break on this. And I even called out a nice, beautiful wash. I didn't think it was going to wash this low, I'll be very honest. I thought it would wash out at least down to 171 before grabbing a bid and heading higher. This thing washed all the way down to 167.43. 10 minutes, guys. 10 minutes until the Fed rate decision comes out. So keep that in mind. It's going to be very, very important. We got 22 of you here watching now. And just before I carry on, I would love for you to do me a huge favor. Take a look at my screen, guys. This is called self-preservation. Smash that like button. Vote on the poll. We got 16 voted on the poll. Will Daddy P seem more hawkish or dovish? 12% of you said hawkish, bad things to come. 38% said dovish, everything's going great. And 50% of you said, I don't know what kind of bird this man is. I love it. But just hit that like button for me. Smash that subscribe if you haven't already. Guys, we bring you data. We bring you news. I do live trading in front of you every single time I'm on here if there is a setup to do. So smash that like, smash that subscribe button, and I'm going to send a little love your way. So thank you guys so much for joining me. Thank you for being here. We got 9 minutes till that Fed rate decision is getting dropped, and then 30 minutes after that, so less than 40 minutes, the FOMC meeting comes out. Old Papa Powell is my special guest today. We already have it up and ready for you, so you guys can see it right here. This thing is going live, and we will be here for you so you can watch it here first, guys. So thank you so much for being with me, and we can keep on keeping on. So Tesla, yeah, had that big swipe today, big swipe. Headed right back up. We're chilling at 178.75 right now. And guys, if you have any questions before this goes off, we only have 8 minutes, but if you have any questions on any ticker that you're watching, make sure it's a relatively strong stock in this market, and we will be happy to go over it, okay? So let's go back to the S&P 500. Tesla's looking good, but I need to wait on a pullback for another setup because I can't just take it willy-nilly. So the S&P 500 just trading sideways. Let's take a look at the IWM and the QQQs. So IWM and the QQQs, they're all looking pretty similar. The QQQs obviously looking a little stronger than the S&P 500. And the IWM is kind of looking like the S&P 500 on an intraday time frame, obviously overall. Now RSP, let's see, are we getting some breath? The breath is starting to have some bad breath here, but the RSP is kind of pulling back a little bit. So we're going to see what the overall market wants to do. But man, I tell you, so far it's been an absolutely beautiful day. I'll run through my trades really quick. AMRX, the breakout's still holding out very well. AMF is still heading to the north side. You know, I don't like when my stocks get too far extended like this. It does make me want to take some of my shares out of this trade because I'm still holding 75 shares. So maybe if we reach this all-time high here, what I can do is get rid of this. And when we reach this all-time high, and you guys will see why you don't want to buy all-time highs, because if you're a decent trader in any sense of the word, you'll find out that a good trader will buy low and sell high, right? I'm sure you've heard that. Well, look at this. What am I going to do? Well, I'm going to set an alert to get out 25 shares here, because if this thing just, let's say Papa Powell comes out and everybody loves what he has to say, and this thing just gets to ripping, well, I can tell you this. If it does, I'm going to want to sell out a few shares up here, okay? A few shares right up here. Let's see, the all-time high is 196.99. So I'm going to sell at 195.99 because if this gets too extended from the 10-day moving average, I'm going to want to take a little out. You know, I don't want to be holding the whole thing when it comes all the way back down, because that's where I want to add. I'm willing to add, after I sell 25 shares, I'm willing to add 50 back as long as it stays above that 10-day moving average, okay? So 196 196.99 is the all-time highs, and I'll take it out at 196.50. I'll sell 25 shares all the way up here if it wants to climb that high. We got a ways to go, but I've seen crazier stuff. Now we have 5 minutes. 5 minutes until we have that data dropping. So let's be very cautious here. Make sure you guys keep this, stay vigilant, have your risk management in line. It looks like we're getting a bounce off of that VWAP area. Things are looking good. Let me grab a sip. Oh yeah. Oh yeah, baby. We're gonna have a good meeting tonight in the Discord. It's gonna be a good meeting. Oh yeah. Let's see, let's check the Discord. Okay, we're all square there. I see the schedule. Things are looking good, guys. Let's go ahead and, we don't need this up, but just so you guys know, I will be live. We will be live for that. No sweat. Let's see here. Just keep a close eye on this. Oh, okay, so they're just letting it run. Yeah, that's looking good. All right. All right, baby. Yeah. 4 minutes. Here we go. Shake it out. Shake it out, baby. Here we go. It's going to be a good time. Hell yeah. Fed rate decision, baby. Now, again, we will do a quick overview. The Fed rate decision today is marked by it most likely by a let's see what it is. For June, we are 99.9% sure that the Feds will keep rates the same at 5.5%. All right? If there is a change, you're going to see it in the chart before I can even read the news. If there is a change, it's going to be absolutely enormous. If they decide to do a surprise rate cut, you're going to see this market go so high, so fast, so hard, you're not going to know what to do. You're going to wish that you were here with us when I was saying risk on when we bounced off that $500 psychological area for the S&P 500. You're going to wish that you had those on. If not, you're going to be playing this fear of missing out game. And I promise you that game is not lived for very long. You won't have an account if you play that fear of missing out game. All right, so if you're not already in your longs, I can promise you everything's already overextended. All right, so keep that in mind. With 3 minutes and 34 seconds left to go, I am pumped to see what happens here. Remember, if we get a lower than expected forecast at 5.5% and Fed decides to cut rates, it's going to be very unexpected and the market's going to go booming to the north side. Rip, rip, tater chip, baby. But if the Fed, for some really weird reason, decides they need to raise those interest rates, you are going to see this market fail. It's going to tank very hard, very fast. But most likely, and I put my trust in old, I gotta keep looking, Daddy P. It makes me laugh. I call him Papa Powell, but you know, Daddy P is pretty cool too. So if Daddy P comes out, he usually says what he intends to happen. So far, he hasn't really lied to us. And you know, I know a lot of people, you know, oh, the Fed's lying, the Fed's this. If I've been listening to old Daddy P for quite some time now, and everything he says he does, so far anyway, okay? He says what he's trying to do. He comes out, talks about the data. He's stuck to the narrative is what he calls it. He is sticking to the narrative. He is expecting inflation to come down to the 2%. If it comes down to that 2%, that is his goal, inflation at 2%. If he can get inflation down to 2%, he will start to lift those, or if at least he sees that it's starting to come down to 2%. Now, speaking of 2%, we're down to less than 2 minutes, guys. Less than 2 minutes, and the data is going to drop, okay? So let's keep that in mind. The news, I got the news up here. We'll go ahead and blow this up. We don't need the daily now. We already have our areas. Let me go ahead and switch some things around. All right, guys, get ready. It's going to be a big one. New all-time highs today at 543.96. I have two different areas of data up, so that way we get the news here first for you. It's coming out in less than a minute. Less than a minute. We can go ahead and get rid of this. Actually, we can switch this to a 30-minute timer now. Let me bring this over here. We'll switch this to a 30-minute timer. I'll do 30 minutes here. All right, this is when, oh, that's 30 hours. We'll have to fix this in a minute because the data's getting ready to drop, so I'm not gonna mess around with this. I hope you guys are ready. I know I'm ready. Okay, data, come on. We got 30 minutes till the FOMC meeting. The data's getting ready to drop. Here we go, people. Pay attention, be vigilant, make sure you got your stop losses in, and bam, the market's pulling back right now very quickly, 540.21. I've seen this happen before. The data is not out yet. If it is, it's not on my end. We get a big pullback and a nice wick. It's getting bought right back up. So here we go, guys, a 5.5. So it did come out as expected. The Fed interest rate decision at 5.5, they decided to stay, okay? And Papa Powell will be coming out in 30 minutes to talk about this Fed rate decision, okay? We get a big drop in the market, though, with that same Fed rate decision. I can almost guarantee you, and I shouldn't say this, what I am expecting to see that happens is it comes back up to where it started. If we have a pullback, that's A-okay. We talked about this gap and how bullish things look as it comes up. Raj says 5.5. Absolutely, Raj, you're on top of it, brother. 5.5 it is, and it's good to see that they decided to stay, because any inconsistencies or any pullbacks in that 5.5 would have looked awfully bad. So the 5.5 is out. We pulled all the way back to 540.76, and now we're seeing a big wick here off that bottom. So let's go ahead and take a look. I just need to take a look at a few things. ANF had a nice pullback. That's good to see. I don't want to see this thing getting too out of hand. But we want to keep a closer eye on the S&P 500 to make sure we don't get any further sell-off. Now, that 540 was A-okay. We want to see it get ripped back up into the areas that we were talking about before the old Papa Powell comes out on this meeting. All right, let's go ahead and let's see. What's this here? Yeah, keep on top. There we go. We're going to keep this here. So we got less than 30 minutes now, guys, before old Papa Powell comes out and he starts chatting about this interest rate decision. That is when we're going to see the real volatility. Yes, this was some pretty volatile action. Yes, we wicked down to 540. Yes, now we are wicking back up, and you can see it's getting bought right back up. What's going to happen? I have no idea. I don't have a crystal ball. I mean, I do kind of have this crystal ball right here. That's a beautiful crystal ball, but this crystal ball only says one thing and one thing only. Can you guys see that? Look at the camera there. That is a bull, baby. That crystal ball says bull, baby. And it's bullsh if this thing comes down, because with the CPI, with all the positive inflationary data that we have had, we can see that inflation is starting to come down, and sure enough, that wick is getting bought right back up off that 540. We're sitting back up here at 542.24. Things are looking very, very good. And old Papa Powell, old Daddy P, is going to be coming out in less than 27 minutes. So we need to make sure that we stay tuned. What's going on, Raj? It's good to see you in the chat, brother. Good to see you. That is some good stuff. This is my food. This is a meal replacement. I don't have time to eat, guys. The market's awake, right? We're awake, we're alive. And if you guys weren't aware of it, 5.5%. Fed officials project 2.1 GDP growth and 4% unemployment for 2024. It raises the inflation forecast to 2.6%. Sees Fed fund rate at median of 5.1% end of 2024, or 4.1% of end of 2025. 3.1% at the end of 2026. So let's go ahead and look at the CME Fed tool, just because we want to see if it changes at all for our September. Let's go ahead and refresh this. It's at 61.3%. Look at that. Let's go back to September. Sorry about that. 61.3%, guys. That's the highest I've ever seen it. It looks like we are going to be cutting rates in September. That's a really, really good sign for this overall market. We're sitting right now, the S&P 500 at 542.07. Things are looking really good in the overall market. And the little bit of selling off that we've seen looks like it's getting bought right back up here for the S&P 500. So far, things are looking A-okay. The real question is when old Daddy P comes out and he starts dropping the mic, dropping bombs on the mic, if it will continue to hold. And we're going to be here for all of that. I got the chat up. I got it all ready for you right here. So that way we can watch this thing together. You'll be able to hear everything that I'm hearing. And let's just do a little, sound check. Are you with me, Dan, Bob? If you guys can hear, I'm going to turn off the lo-fi music. All right. And we're going to turn on the music for the Fed. Tell me, can you guys hear this?
The board and the reserve banks together help ensure that consumer and community voices are heard at the central bank through consumer-focused outreach, research, and analysis. This helps keep the Federal Reserve's actions, policies, and decision-making attuned to what's going on in American households, communities, and businesses, which are the foundation of our economy. The third key Fed entity is the Federal Open Market Committee, or FOMC.
Good? All right, cool. We're going to cut that music then for now. And we're going to leave the music, we're going to cut the music back on. We're going to have that lo-fi music in the background. But Dan, Bob, if you do me a huge favor, and anybody else thank you, Raj, if you can do me a huge favor, when I go to stream this FOMC press conference, what I need you to do is I need you to remind me to turn off that lo-fi music in the background, because we want to make sure that everybody can hear what my special guest Daddy P has to say. All right, just give me a reminder for that, please and thank you. But yeah, guys, we only have less than 24 minutes, and Papa Powell is going to come out, and I am absolutely pumped for this, guys. I got to get my notebook out. I always take notes for this because there's always something. Now, usually the narrative is the same. He usually will talk basically about the same things. He's been saying the same things the past 5-6 Fed rate meetings. Even when he went to Canada, to our good friends to the north side, he even was speaking with them. He would say the same things over and over and over again. Even the same questions that they would ask him, he would give them the same exact answers. He would say, turn off the, you're supposed to tell me when it's time. You got to tell me in 23 minutes, dude. Not right now. Dan, Bob, don't be one of my kids, bro. But no, he has the same narrative over and over and over again, right? He has the same narrative. He always says, you know, the Fed is sticking to the narrative, and that is bringing inflation down to that 2%. Okay, because we're always going to have inflation, guys. There's always going to be inflation. His goal is to bring it down to that 2%. And if he can get it down to that 2% by holding interest rates at 5.5%, then that is sticking to the narrative. The only other job the Fed has to do is to keep jobs higher, okay? So he wants to keep those jobs high. And you guys will see that as the unemployment goes up, right, as the debt goes up, we have a bigger chance of a rate cut as well. But if inflation stays high, that's going to be a bigger issue than the unemployment rate, because the unemployment rate is not doing that bad. We only have started to see the economic contraction with unemployment right now, okay? We have a huge demand for jobs, okay? And we also have a huge influx of new people to take those jobs. So we're actually able to keep the America running strong, and we're actually seeing pretty solid jobs data. But when it comes to the most recent jobs data, it's been slightly high, which is showing economic contraction, which is a good thing for inflation. Now, with the CME Fed tool, we can see, you know, September, that 64% is looking very, very good. So if he sticks to that narrative and continues to say the same thing, we are still going to have a trajectory to the north side, because we are still going to show that Fed rates are planning to cut still in September. But if he comes out and he acts hawkish during this, it's going to be very, very bad for the overall market. So we're going to end this poll. All right, let's end this poll. And you guys said, will Daddy P seem more hawkish or dovish in his speech? 47% of you said, I don't know what kind of bird this man is. All right, well, dovish is at 41%, where he's going to say everything's going fine. The economic data seems to be telling me that we will be able to cut rates this year at some point. He'll say things like that, where he seems very dovish. He seems very light on his feet. He seems like things are going to be okay, and he's giving the American the example that things are to look forward to. As to where 11% of you said hawkish, bad things to come. He's going to say this data that is taken in doesn't look as good. You know, the inflationary data seems to be high, but the core data doesn't seem to be giving me the value that I would like to. I don't have the confidence in the economic contraction. We need to see more economic contraction. You'll see the market head lower, okay? So that's why we took this poll. So 47% of you just don't understand what kind of bird this man is going to be, but 41% of you said dovish. Dovish, he's going to come out and he's going to act like there are good things to come. Right now, with the S&P 500 and 20 minutes left until the FOMC meeting, we are sitting at 541.85. So things are still looking very good for this overall market. We're still holding above that red to green day where we opened up this morning at 541.35. We're sitting at 541.88. So we're still above where we opened today. So that's a very positive sign. Okay, so what should be on the next poll? Any ideas on what we should ask for the next poll? I think I have a good one. Does the S&P 500 finish above or below its opening price? So let's start a poll. Let's say, let's ask the question: will the market end? Let's see. Above or below its open price of, and where was it opened? I think it opened at 541.33. 541.33. So we'll do above, below, and we'll add one more option. We'll do hopefully I know how to spell bananas. Oh, did I spell bananas right? All right, we got a new poll up, guys. The question is, will the market end above or below its open price of 541.33? So right now we're sitting at 541.83. So it's a very, very good question here because the market could go either way. With 17 minutes left until old Papa Powell or Daddy P comes out and he grabs that microphone, I really would like for you guys to vote on this now, because if you vote on it now, I think it's going to hold more weight at the end there, okay? So I think, like, let's just take a look. Let's just take a look at this, guys. Let me bring this up. Let's take a look at this. So check this out right here. Right here is where we opened up this morning, okay, at 541.33. Now, we wick down below this with the Fed interest rate decision of 5.5%, which is a stay, meaning he's going to keep the rates the same. We wick down below this and got bought right back up. Are we going to hold this gap up from the CPI index? Because right here was where the CPI index was, right? The CPI index came out much lower than expected for the core, the year over year, and the month over month. So all really, really good data points for that inflationary data. And then it ramped up. We opened up here at 541.33. The FOMC, or the Fed rate decision, came out, and then boom, we ripped back down here and got bought right back up. Now we're sitting just above it, okay? So right now you're in the money, right? If we're playing options. What I need you guys to do is vote on that poll and let me know what you think. Here, take a look at my screen. I'm gonna vote that we are gonna stay above it. I am biased. I usually am more expectant to the positive side, but I would like to see what the overall agenda is for this group. I think we have 18 of you in here right now. That's what it's saying down here. So if you guys could vote on that poll, I think it'll be a fun little poll. And then of course, I'll refresh this. We'll see where we're at on the likes. We're trying to beat 30 likes today. We're trying to get to 31. So if you guys haven't already, smash that like button. And if you feel entitled, if you feel like what I'm doing is at all helpful in any way, shape, or form, hit that subscribe button, guys. Hit that subscribe button. We bring you the data first. I bring it to you in bite-sized data so that way you know what's going on without having to ingest or learn everything when it comes to economics. It can be very fruitful to have this crew on your side. And then, of course, everything's free, guys. Everything that I bring you is absolutely free. We also have a Discord. Dan Bob will throw the Discord up in the chat just for you guys. You're more than welcome to join. We have a meeting tonight at 9. We'll go over everything that we talked about today. We'll go over a watch list, and we have an amazing crew in there. We have some 7-figure traders in this Discord, I'm very proud to say. Can't wait to get to there myself. 7-figure traders, it's a big deal, guys. It's a big deal, so make sure that you guys join this Discord because it's absolutely free. We don't ask any money because we don't want your damn money, okay? Let me shoot some love your way, and we're going to get right back into it. Because, guys, in less than 15 minutes, what do we have? Less than 15 minutes, we have the FOMC meeting. Okay, we have it all up. It's ready. It's live for you. It's sitting right here. I'm just waiting for my sweet, sweet special guest, old Papa Powell, to come out today. Once he comes out and he says, hey, Dave, you know, I appreciate your show. We love your show, but I want to come out here and I want to chat. You know, I want to chat with your group. I'm going to say, you know what? I'm going to allow it. I'm going to allow it. Troy Wiseman says time zones. What about the time zones? Oh, the time zones, we only speak in market time. Market time is Eastern, yes, but you will always hear me speaking in market time. So market time is New York time or Eastern time, and we meet at 9 o'clock market time every night, except for Fridays and Saturdays, because your boy needs a day off. You know, our greatest moderator live needs a day off. Covey needs a day off, but we're always still endlessly working, scouring the market every Sunday, more than 300 charts, around 400 charts every weekend we go through to bring you the best data, the best content, the best everything. Now let's look at the S&P 500 as maybe I shouldn't stop talking because it's bringing this right back up underneath VWAP right now. And so far on the poll, we already have 12 votes, guys. Congrats on that. We are growing so stinking fast. It's amazing. So above, we are 50% say we're going to be above the closing price. So above this 51.33. 33% that we are going to be below. And then 17% of you decided that this ish is bananas. B-A-N-A-N-A-S. Did I spell it right? B-A-N-A-N-A-S. Okay, cool. What song was that taught everybody how to spell bananas? I forget the name of the song, but you know, this ish is bananas. So the S&P 500 holding up here very well. If you guys don't mind, because we only have 13 minutes, I would love to go through my trades. I'll make it quick. I just want to see where we're at on a lot of these. So the AMRX, you can see I took this on a base breakout right here. You can see this base breakout is paying me pretty well. We're not up much. We're up an easy $59, so it's chump change. We're up $2.50 for the day. I'm buying the coffee. Abercrombie & Fitch, wow, this thing is still rising to the top side. We're up 500 for the day, but on the total trade, when I took this 5 trading days ago, we're up $1,538 on Abercrombie & Fitch. Why did we take this? It was relatively strong. It was a former leader. It had a trend breakout after an earnings gap up. This was absolutely a beautiful trade, and this is what I look to trade every single time. We also took ASTS. We're up about $644 on this trade. As of today, we had a small pullback, so we're down $34 on the trade today, but overall, my P&L on this trade is up $644. That looks absolutely amazing. I'm waiting to see some continuation, but because we are extended from this 10-day moving average, I would like to see this thing kind of trade sideways, let the moving averages catch up before we get another breakout on ASTS. Now I'm also holding 2 more stocks. That's FSLR. You can see I decided to take this on the trend breakout. We tried this twice. I lost a little money my first time trying to trade this, but the second time it seemed to stick on this trend breakout. Now it's heading higher. It looks like we're up about $215 total on the trade, or 88. Oh yeah. Gwen Stefani. Yeah, I totally forgot about Gwen Stefani. That's who it was. Who would have thought I'd be talking about Gwen Stefani on this trade today, you know? Dan Bob, yeah, thank you, Dan Bob. Troy Wiseman says, you're the man. Stephanie Swan says, Bay, nice trade. Yeah, bang, bang. Nice trade. Thank you very much. I do appreciate that. Predator, Gwen Stefani, man. Flashbacks, right? I was young. I remember eating ice cream singing that. This ish is bananas, you know, but it's hard to look so manly when you're eating ice cream singing this ish is bananas on live stream, right? But anyway, back to the trades, guys. First solar, we decided to take this trend breakout. You'll see it looks a lot like Epicromi and Fitch. We decided to take this trade out as a trend breakout. Also, it's relatively strong in the market. Plus, it also previously gapped up. You're going to see a lot of my trades are the same because I have a process. That process earns me money, and that money turns into content. You know, if I'm making money and I show you I'm making money, it shows that you can make money if you do the same things. Now, I'm not telling you to take these trades. I'm not telling you to buy or sell anything. I'm saying if you find your process, right, and you learn from other traders who know what the hell they're doing, you can make money too, right? So I'm not asking you to I'll always ask you to subscribe to the channel. I'll always ask you to join the Discord, but I'll never ask you for any money. And that being said, careful with the scammers in that Discord, guys. Those scammers are reaching out to you. I'll never reach out to you. I'll never send you a friend's request. I'll never ask you anything unless it's in our general chat. Keep that in mind. The general chat is key. If I send you a friend's request, immediately understand that it's a scam. I would never do that. I'm never going to ask you for anything except for your time like you're giving me today. So thank you guys so much for being here. So FSLR is looking good. We're up 211 on that one. And NVDL. Now, I have extrapolated a ton of money playing NVDL. It is NVDA. It was just before the stock split. It was cheaper to buy NVDL. Now you can pretty much buy it for the same price. It's pretty close to the same price. It's like a $20 difference per share. But either way, you can still extrapolate some good money. So NVDA reaching new all-time highs today. Absolutely beautiful. We're up $578 on this last eighth of this trade. I have already sold out 7/8 of this trade. On this last eighth of this trade, I'm only holding 25 more shares, and I won't close out until it closes below the 10-day moving average. All right, so we're up $573, $120 on the day. And that being said, ladies and gentlemen, it is 8 minutes till Papa Powell comes out. 8 minutes until he comes out. I got my notepad ready, okay, in case I have any questions to ask him, right? I'll just call in and say, you know, Mr. P. Daddy. I can't say P. Daddy. It sounds like P. Diddy. Daddy P. Papa Powell. I got a few questions for you. No, they always, you know, they always have good questions. I always, you know, you listen to a spiel, a lot of times it sounds the same. If you can find the small nuances that are different in that, it can make you money, okay? But what I really like to wait for is right towards the end there, they always ask very, very good questions. Those questions, when they ask those questions, they can be, because they're not prepared questions, and you can tell they're not prepared because a lot of times he'll fumble over his words a little bit because he doesn't want to say the wrong thing, okay? So if we really pay attention to the questions that they're asking, that's right towards the end, right before the end. And here we are, guys. We're back above that VWAP area. Look at that, big wick. So that 5.5 decision came out. Then we got a big wick. It headed right back up to the top here. It bounced off VWAP a few times, and boom, now we're above the volume-weighted average price. So look at that. Absolutely beautiful. Absolutely beautiful. You love to see it, guys. It's such a nice thing. We got 16 of you viewing this. This is killing the watch time hours. It won't be long, guys, and we will be on the right track. Our main goal is 1,000 subscribers for this YouTube channel. That's always the first goal. So if you haven't already and you're listening to me, hit that subscribe button. Be a part, be an OG, an original person to join this, because we all know that this channel is gonna go far. It's all free, it's all amazing information. We do live trading, live commentary, live everything, right? We do it all live, and if not, we do it in the Discord. We're bringing you all that content. We're growing a kick-ass community, man. I mean, there's so many awesome people that, especially most recently, there's been a ton of people that have been joining recently too, that have been very, very helpful. Once you understand the criteria of what we're looking for, and you start calling out the right tickers, and we're not wasting our time going through shit tickers, and we're going through the right tickers, we end up getting a really solid watch list. So it's really nice having a group, a community to be a part of where we all are looking for the same thing. So shout out to you guys, shout out to the OGs. You know, thank you guys so much for being a part of this. And there it is again. My face is over the thing. I gotta move this over so that way it's not in front of my face. There we go. Now you guys will be able to see this. We got 5 minutes and 40 seconds till Papa Powell comes out and he starts spitting some ill verses on that microphone. He just comes out and he starts rapping about like inflation and how he needs to bring it down. You know, like, yo, listen up. It's Daddy P on the mic. We got to bring inflation down tonight. So quit spending, all right? Could you imagine? That would be hilarious. This I don't know how old he is, but he just comes out, you know, just hat on sideways, starts spitting about economic inflation. Oh man, I love it. It would be a good time. Here, this one's for you guys. This is iced coffee. It's in a hospital cup. This is gonna be a great show, man. It's gonna be a great show. He's coming up. He's coming up, and I get to sit back, relax, and listen to the best part about the market, and that's old Daddy P coming out here. Daddy P coming out to spit some mad verbiage on the microphone, and I can't wait till he does, guys. We're gonna sit back, relax, enjoy what he has to say, and of course, now you can't see the, there we go. There we go. I want you guys to see the countdown. I worked so hard on the countdown today. So this one's for you guys. Cheers to you guys. I don't know what you guys are drinking. Right now I'm on iced coffee and, well, I'm almost done with my liquid lunch or dinner. Hopefully it's not my dinner. My wife might feed me dinner tonight, but this one's for you guys. Cheers to you. Cheers to a good FOMC meeting. And this one's for you guys, yeah. Woo! I'm excited. I'm pumped, man. Things are heating up, baby. About to crack a door, about to crack a window. Getting warm, baby. It's gonna be good. All right, we got about 3.5 minutes, guys. I hope you guys are ready. I know I'm ready. We're gonna bring this video up now. Let's bring this up for you guys. Here we go. All right. And what we'll do is we will bring this up. We'll maximize this so you guys can always see the S&P 500 on here. And we'll bring this up so you guys can see the way he looks. We can get rid of this now because it's starting here in about 3 minutes. Well, I'll wait. And then, whoops, we don't want to do that. But we'll get this all set up, make it looking real good for you. We don't have any. Yeah, there we go. That looks good. Oh, that looks good. And then, yeah, that's going to be starting here in about 2.5 minutes, guys. So you joined just at the right time. I am pumped for this, guys. You have no idea. Make sure you vote on the poll. And just before we start, guys, just really quick, I'm going to ask you one last time. I promise I won't ask till the end. But we're doing our best to get the likes and the subscribes up. So go ahead and look at my screen really quick. We're going to do a quick refresh on this to see where we're at. If you guys do me a huge favor, hit that like. Hit that subscribe button. We're up to 18 likes. The goal for today is to beat the all-time high of that 30 likes. We want to get 31 today. We're already at 18 likes. So if you haven't already, do me a huge favor and smash that like button. And if you haven't, I don't know what the hell you're waiting for. Hit that subscribe button. We're here almost every single day. We bring you a piece of data. We bring you a piece or a trade, a live trade. We do live commentary. We do meetings in our Discord every night at 9 except for Fridays and Saturdays. We're doing something every day on this channel. If you want to be here to watch it grow, hit that like, hit that subscribe button. Dan, Bob, Dan, the greatest moderator alive, just posted our Facebook group as well. If you guys want to join our Facebook swing trading group, you can. That's a new community. We actually just started that up about a week or two ago, and it's already starting to get some traction. So if you want to be a part of that too, depending on what platform you're on, you can also click the description down below. You can click my link tree. You can find me on so many different platforms, guys. There's, Discord, Snapchat, Facebook. Actually, we got to put the Facebook group in the description to Dan Bob. So after the show, we'll take a look at that. But guys, we have 1 minute left to go. Dan Bob Dan, the greatest moderator alive. Thank you for reminding me about the lo-fi music. That is off now. And it looks like we are ready for old Papa Powell to come out here. So we'll get rid of this and we'll go ahead and keep a very close eye on because it should be starting here at 2:30. We got about, looks like about a minute left. And let's go over this S&P 500, guys. The S&P 500 is now trading at 542.82. I asked you guys to vote on the poll. 47% of you, this is very interesting, 47% of you said it's going to close above its opening price of 541.33. Now remember, that's the gap up price. After the CPI index came out, the gap up price was at 541.33. 47% of you said we're going to hold that gap and we're going to stay above that gap. And then 33% of you said we would fall below. 33% we would fall below that gap. And I have that gap marked out right here in red for you. Okay? We want to keep a very close eye on that to make sure that we are staying above that. Now, when we see the... Oh, here we go, guys. All right. We're just waiting for Powell to come out on stage, and I will mute myself so that way we don't have any interruptions. Should we make this bigger? Should we make the screen bigger? What do you guys think? If you guys want, I can make the Fed meeting screen bigger. It's totally up to you. Go like this, maybe? What do you think? Go like that. And then we can scrunch this down. We can bring this to the front, maybe. There he is.
Good afternoon.
Guys,
my colleagues and I remain squarely focused on achieving our dual mandate goals of maximum employment and stable prices for the benefit of the American people. Our economy has made considerable progress toward both goals over the past 2 years. The labor market has come into better balance with continued strong job gains and a low unemployment rate.
Thanks, guys.
Inflation has eased substantially from a peak of 7% to 2.7%, but is still too high. We are strongly committed to returning inflation to our 2% goal in support of a strong economy that benefits everyone. Today, the FOMC decided to leave our policy interest rate unchanged and to continue to reduce our securities holdings. We are maintaining our restrictive stance of monetary policy in order to keep demand in line with supply and reduce inflationary pressures. I'll have more to say about monetary policy after briefly reviewing economic developments. Recent indicators suggest that economic activity has continued to expand at a solid pace. Although GDP growth moderated from 3.4% in the fourth quarter of last year to 1.3% in the first quarter, private domestic final purchases, which excludes inventory investment, government spending, and net exports, and usually sends a clearer signal on underlying demand, grew at 2.8% in the first quarter, nearly as strong as the second half of 2023. Growth of consumer spending has slowed from last year's robust pace, but remains solid. And investment in equipment and intangibles has picked up from its anemic pace last year. Improving supply conditions have supported resilient demand and the strong performance of the U.S. economy over the past year. In our summary of economic projections, committee participants generally expect GDP growth to slow from last year's pace, with a median projection of 2.1% this year and 2.0% over the next 2 years. In the labor market, supply and demand conditions have come into better balance. Payroll job gains averaged 218,000 jobs per month in April and May, a pace that is still strong, but a bit below that seen in the first quarter. The unemployment rate ticked up, but remains low at 4%. Strong job creation over the past couple of years has been accompanied by an increase in the supply of workers, reflecting increases in participation among individuals aged 25 to 54 years and a continued strong pace of immigration. Nominal wage growth has eased over the past year, and the jobs to workers gap has narrowed. Overall, a broad set of indicators suggests that conditions in the labor market have returned to about where they stood on the eve of the pandemic, relatively tight but not overheated. FOMC participants expect labor market strength to continue. The median unemployment rate projection in the SEP is 4.0% at the end of this year and 4.2% at the end of next year. Inflation has eased notably over the past 2 years, but remains above our longer-run goal of 2%. Total PCE prices rose 2.7% over the 12 months ending in April. Excluding the volatile food and energy categories, core PCE prices rose 2.8%. The Consumer Price Index, which came out this morning and tends to run higher than the PCE price index, rose 3.3% over the 12 months ending in May, and the core CPI rose 3.4%. The inflation data received earlier this year were higher than expected, though more recent monthly readings have eased somewhat. Longer-term inflation expectations appear to remain well anchored, as reflected in a broad range of surveys of households and businesses and forecasters, as well as measures from financial markets. The median projection in the SEP for total PCE inflation is 2.6% this year, 2.3% next year, and 2.0% in 2026. My colleagues and I are acutely aware that high inflation imposes significant hardship as it erodes purchasing power, especially for those least able to meet the higher costs of essentials like food, housing, and transportation. Our monetary policy actions are guided by our dual mandate to promote maximum employment and stable prices for the American people. In support of these goals, the committee decided at today's meeting to maintain the target range for the federal funds rate at 5.25% to 5.5%, and to continue reducing our securities holdings. As labor market tightness has eased and inflation has declined over the past year, the risks to achieving our employment and inflation goals have moved toward better balance. The economic outlook is uncertain, however, and we remain highly attentive to inflation risks. We've stated that we do not expect it will be appropriate to reduce the target range for the federal funds rate until we have gained greater confidence that inflation is moving sustainably toward 2%. So far this year, the data have not given us that greater confidence. The most recent inflation readings have been more favorable than earlier in the year, however, and there has been modest further progress toward our inflation objective. We'll need to see more good data to bolster our confidence that inflation is moving sustainably toward 2%. We know that reducing policy restraint too soon or too much could result in a reversal of the progress that we've seen on inflation. At the same time, reducing policy restraint too late or too little could unduly weaken economic activity and employment. In considering any adjustments to the target range for the federal funds rate, the committee will carefully assess incoming data, the evolving outlook, and the balance of risks. In our SEP, FOMC participants wrote down their individual assessments of an appropriate path for the federal funds rate, based on what each participant judges to be the most likely scenario going forward. If the economy evolves as expected, the median participant projects that the appropriate level of the federal funds rate will be 5.1% at the end of this year, 4.1% at the end of 2025, and 3.1% at the end of 2026. But these projections are not a committee plan or any kind of a decision. As the economy evolves, assessments of the appropriate policy path will adjust in order to best promote our maximum employment and price stability goals. If the economy remains solid and inflation persists, we're prepared to maintain the current target range for the federal funds rate as long as appropriate. If the labor market were to weaken unexpectedly, or if inflation were to fall more quickly than anticipated, we're prepared to respond. Policy is well positioned to deal with the risks and uncertainties that we face in pursuing both sides of our dual mandate. We'll continue to make our decisions meeting by meeting, based on the totality of the data and its implications for the outlook and the balance of risks. The Fed has been assigned two goals for monetary policy: maximum employment and stable prices. We remain committed to bringing inflation back down to our 2% goal and to keeping longer-term inflation expectations well anchored. Restoring price stability is essential to achieving maximum employment and stable prices over the long run. Our success in delivering on these goals matters to all Americans. We understand that our actions affect communities, families, and businesses across the country. everything we do is in service to our public mission. We at the Fed will do everything we can to achieve our maximum employment and price stability goals. Thank you, and I look forward to your questions.
All right, pay attention, guys. This is the most important part.
Thank you, Mr. Chairman. Steve Leisman, CNBC. Just wondering if you could walk me through the committee's average inflation forecast. Core PCE is now forecast to be 2.8% by the year end. It's already 2.75, and after today's number, there were several forecasts on the street that it would be 2.6 at the end of this month. Does that tell you that the average official expects no further progress in inflation, and in fact that it's going to get worse? And if you have this wrong, doesn't it mean that you could have wrong the outlook for rates there?
Yeah, so what's going on there is that we had very low readings in the second half of last year, June through December really, and we're now lapping those. So as you go through the 12-month window, a very low reading drops out and a new reading comes in. The new reading gets added to the 12-month window. So it's just a slight element of conservatism that we're assuming a certain level of incoming monthly PCE and core PCE numbers. We're assuming, a good but not great numbers. And if you put that on top of where we are now, you get a very slight increase in the 12-month reading. Now, do we have high confidence that that's right? No, it's just a kind of conservative way for forecasting things. If we were to get more readings like today's reading, then of course that wouldn't be the case. So it's just a forecasting device. I think. Let me say that we welcome today's reading and hope for more like that.
But if it comes in, just to follow up, it comes in the way you forecast it, it would seem strange for you to be cutting rates at all in context of a rising core PCE. Thank you.
Yeah, no, I mean, I think what we said is that we don't think it'll be appropriate to reduce rates and begin to loosen policy until we have more confidence that inflation is moving back down to 2% on a sustainable basis. And that's the test we've applied. I don't know that this rules that in or out. I mean, really, it's a forecast, a fairly conservative forecast, month by month, that would lead to slightly higher 12 months rates by the end of the year. If we get, better ratings than that, then you will see that come down or remain the same. If you're at 2.6, 2.7, that's a really good place to be.
Beautifully answered. And I don't like the way that guy was talking to old Daddy P. He needs to calm his tits.
Nick Temeros of the Wall Street Journal. Chair Powell, if I look at the rate projections, I see 15 of the 19 that are anticipating either one or two cuts this year, fairly evenly split between the two. And so I wonder if you could explain a little bit more the nuances or the differences there. Would 2 or 3 more inflation readings, like the one that we saw this morning, make a September interest rate cut possible?
So as far as the SEP part of that is concerned, as you know, I talk to all of the other participants on the FOMC every cycle, and we talk about their summary of economic projections and the their dot plot and everything. And what I hear and see is that people are looking at a range of plausible outcomes, and in many cases they're thinking, I can't really distinguish between two of these. They're so close for me. These are very close calls. But we ask them to write down the most likely one, so they do. And I think as you've said, there's 15 of the 19 are kind of clustered around 1 or 2. So I think I would look at all. I look at all of them as plausible, but I'd look at I think that does tell you kind of what the committee thinks. But what everyone agrees on is it's going to be data dependent. No one brings to this or takes away from it, that is on the committee, a really strong commitment to a particular rate path. It's actually just their forecast, and it's a combination of their forecast and their own reaction function. But again, everyone would say that this is very data dependent, and I don't hold it with high confidence. And I think if you're looking for and don't really think that they're not trying to send a strong signal that this is what I think is the right thing. It's just what they think at a given moment in time, subject to data. In terms of future meetings, we haven't, we don't make decisions about future meetings until we get there. I think in terms of what we need to see, I mentioned it earlier. We want to gain further confidence. Certainly, more good inflation readings will help with that. I'm not going to be specific about how many because, really it's going to be not just the inflation readings, it's going to be the totality of the data. What's happening in the labor market, what's happening with the balance of risks, what's happening with the forecast, what's happening with growth. You look at all of that and you ask, are we confident? Have we reached an appropriate level of confidence that inflation is moving down sustainably to 2%? Or alternatively, do we see really unexpected signs of weakness in the labor market that would call for a response? Which is another thing that could happen. But again, we don't see that. And we see today's report as progress and as building confidence, but we don't see ourselves as having the confidence that would warrant beginning to loosen policy at this time.
And if I could quickly follow up, did you or any of your colleagues change your interest rate projections after 8:30 or whenever you got the inflation numbers today?
So this happens too often, but it does happen. It just is, data came, I think it happened a few meetings ago. So when that happens, when there's an important data print during the meeting, first day or second day, what we do is we make sure people remember that they have the ability to update. We tell them how to do that. And some people do, some people don't, most people don't. And I'm not going to get into the specifics, but you have the ability to do that. So that what's in the SEP actually does reflect the data that we got today, to the extent you can, reflect it in one day. I think we'll see PPI tomorrow. We'll know more about the PCE reading as the month goes on, but the initial CPI reading and its, kind of first level translation to PCE we did have this morning. We were briefed about it, and people were able to consider whether they should make changes. And as I said, some people generally do, but most people generally don't.
John Allen.
Hi, Chair Powell, Janelle Marte from Bloomberg. As you noted, the labor market is now in many ways back to where it was before the pandemic. I wondered if you could comment on how officials are viewing that. So do you think that there still needs to be more cooling in the labor market to bring inflation all the way down to 2%? Or is there any sense that maybe the labor market is more vulnerable now to higher rates now that many of those imbalances have eased?
Sure. So by so many measures, the labor market was kind of overheated 2 years ago, and we've seen it gradually move back into much better balance between supply and demand. So what have we seen? We've seen labor force supply come up quite a bit through immigration and through recovering participation. That's ongoing mostly now through the immigration channel, but still we've had some increases in prime age labor force. In terms of on the demand side, we've seen quits moving down. We've seen job openings moving down. We've seen wage increases moving from very, very high levels a couple of years ago back down to more sustainable levels. We have seen unemployment creep up now 0.6 over the course of a year or so, very, very gradually. So you put all that together, what you have is still low unemployment, still 4% unemployment, historically low. But it's moved up a little bit. It's softened a bit, and that's an important statistic. But more than that, you've got strong job creation. You have payroll jobs still coming in strong, even though there's an argument that they may be a bit overstated, but still they're strong. So that's what we see. We watch the labor market, of course, and the economy as a whole, but the labor market very carefully, and that's what we see. We see gradual cooling, gradual moving toward better balance. We're monitoring it carefully for signs of something more than that, but we really don't see that.
As a quick follow-up, the surveys that make up the jobs report are showing different tales. There's been some divergence, especially we saw in the last report that we got on Friday. So how do you interpret that, and how does it change your view on the labor market?
So sometimes you can't reconcile the differences. You just have to look at it and try to understand, and that's why it always makes sense to look at a series, in 3, 6, and 12 months of things rather than just one report. But you're right to point to the last report where there were job losses in the household survey, job gains, big job gains in the establishment survey. So, we're left with ambiguous results, and we have to deal with that uncertainty around data. Nonetheless, the overall picture is one of a strong and gradually cooling, gradually rebalancing labor market. Job openings, while they've come way down, are still, greater than the number of unemployed people. The jobs workers gap is still a significantly positive number, greater than it was before the pandemic. So overall, we're looking at what is still a very strong labor market, but not the superheated labor market of 2 years ago, or even 1 year ago.
Thanks, Chair Powell. Neil Irwin with Axios. Back on the rates path, the SEP showed quite a large shift of rate cut expectations relative to March. That's a period in which the economic data flow hasn't been that dramatic a shift. How can you provide some color on what changed in attitudes on the committee over the last 3 months to see a much shallower path of rate cuts this year?
Yeah, the big thing that changed was the inflation forecast. So the inflation forecast moved up several tenths for the end of the year, and as I mentioned earlier in the, what did we take away from this? We had really good inflation data in the second half of last year, then kind of a pause in progress in the first quarter, and what we took away from that was that it's probably going to take longer to get the confidence that we need to begin to loosen policy. So the sense of that is that rate cuts that might have taken place this year take place next year. There are fewer rate cuts in the median this year, but there's one more next year. So if you look at year-end 2025 and 26, you're almost exactly where you would have been. Just it's moved later because of that progress. Now you get different data today. So we'll have to see where the data light the way. The economy has repeatedly surprised forecasters in both directions, and today was certainly a better inflation report than almost anybody expected. And we'll just have to see what the incoming data flow brings and how that affects the outlook and the balance of risks.
Gina. Gina Smiley, New York Times. Thanks for taking our questions. In the summary of economic projections, the long-run interest rate forecast moved up a bit. I wonder if we should read that as a sign that you think that policy is not sort of as restrictive as we previously expected. How should we interpret what that means about how the committee views its current policy setting?
So two things about that. One is this. You're right, it did move up, but I want to remember to point out that long-run neutral rate of interest is a long-run concept. It really is a theoretical concept, can't be directly observed, and what it is the interest rate that would hold the economy at equilibrium, maximum employment, and price stability, potentially years in the future where there are no shocks. So it's a little bit, it's not something we observe today. Today we've got a very specific economy with all kinds of shocks we're still getting over from the pandemic. So it's I don't think that the concept of R-star, it's a very important concept in economics and in what we do, but honestly, it doesn't really get you where you need to be to think about what appropriate policy is in the near term. But back to your original question, people have been gradually writing it up because I just think people are coming to the view that rates are less likely to go down to their pre-pandemic levels, which people have been gradually writing at history measures. Now, we can't really know that. That's an interesting dispute and discussion to have now, but ultimately, we think that things like the neutral rate are driven by longer-run, slow-moving forces, and there's a really good question about whether those really have changed or whether instead rates and the economy are experiencing a series of persistent but ultimately temporary shocks. That's been the debate, and we can't know. But in the meantime, we're making policy with the economy that we have, with the distortions that we have. And I also, to your other point, I think it is the case that as time has gone by, the question of how restrictive is policy has become one that everyone's asking, and we're asking it too. And my answer has been that policy is restrictive. The question of whether it's sufficiently restrictive is going to be one we know over time. But I think for the reasons I talked about at the last press conference and other places, I think the evidence is pretty clear that policy is restrictive and is having the effects that we would hope for.
S&P 500 teetering on that CPI open price.
Thanks, your pal Howard Schneider with Reuters. Just to carry that a little further, should we read this as a conclusion, the combination of tipping to one cut this year and acknowledging further progress on inflation as kind of a mark to market on the level of restrictiveness that you need, that you in fact have concluded that you weren't quite there yet?
I'd be reluctant to try to draw that conclusion. I think this is about, looking at the incoming data and asking how much progress are we making on inflation and how is the rest of the economy doing? Is the labor market still strong? That's what we're thinking about. You can translate it into the language you're talking about, but to me the focus is more on we have a goal which is price stability, another goal which is maximum employment. How are we doing there? We think we've got a good, strong labor market still. We think we've been making progress toward the price stability goal, and then for a while there was a pause, and we look at today's thing and we think, well, that's a good reading, and we hope we get more like that. And in the meantime, we're asking, is our policy stance about right? And we think yes, it's about right. We're prepared to adjust it as appropriate, but we think we're getting the things that we would want to get, broadly speaking, and that's why we've been at this policy right now for almost a year.
So just to follow up on that, I think one curious thing here is you've got now this restrictive policy in place and virtually no change in any of the major things for all of this year. You've got growth that stays above long-run potential throughout the forecast period, unemployment that never goes above the long-run estimate, right, of 4.2. So this isn't a story of slack improving inflation. So where's the improvement in inflation coming from that it's going to pick up pace so much in 2025?
Well, it's been coming. Where's it been coming from? We'll start with that. Clearly, a lot of some of what we've been getting is just the reversal of the unwinding of the pandemic-related distortions to both supply and demand, and that is complemented by and amplified, supported by restrictive monetary policy. So those two things have been working together. We've also had a very positive supply shock on the labor side, and also you get a positive supply shock when the supply conditions unwind and return to normal. So you've had above trend potential growth and high growth, and yet you've had the benefit of inflation coming down really fast actually last year, and we'll see what the rest of this year brings. So these dynamics can continue as long as they continue. Ultimately, the question is are you down to demand? And we don't know that, though. We're look at today's report. If we see more like that, we can't know what the future holds. But in the meantime, we've made pretty good progress on inflation with our current stance.
Michael McKee from Bloomberg Radio and Television. The base case of the committee seems to be that there is going to be at least one rate cut this year, but your growth forecast doesn't see any slowdown in the rest of the year, nor does the unemployment forecast see any significant weakening of the labor market, and your inflation forecasts basically average out to no change. So if at the end of the year there is no change from conditions now, why would you anticipate cutting rates? What would be the point for a rate cut?
Well, we think policy is restrictive, and we think ultimately that if you just set policy at a restrictive level, eventually you will see real weakening in the economy. So that's always been the thought, is that since we raised rates this far, we've always been pointing to cuts at a certain point, not to eliminate the possibility of hikes, but no one has that as their base case. So no one on the committee does. So that's how we think about it, and that's what we've been getting. That's what we've been getting is good progress on inflation, with growth at a good level, and with a strong labor market. Now, ultimately, we think rates will have to come down to continue to support that, but so far they haven't had to, and that's why we're watching so carefully for signs of weakness. We don't really see that. We kind of see what we wanted to see, which was gradual cooling in demand, gradual rebalancing in the labor market, while we're continuing to make progress on inflation.
That's a really good answer.
We're getting good results here.
Well, to follow up, is there any kind of concern for the housing industry or financial stability, banks, in leaving rates where they are for too long at this point?
On housing, the housing situation is a complicated one, and you can see that's a place where rates are really having a significant effect. I mean, ultimately, the best thing we can do for the housing market is to bring inflation down so that we can bring rates down so that the housing market can continue to normalize. There will still be a national housing shortage, as there was before the pandemic. There will still be one, but the distortions that we see now with lock-ins and things like that, low mortgages. In terms of banks, the banking system has been, solid, strong, well-capitalized, lending. We've seen good performance by the banks. We had the turmoil early last year, but banks have been focusing on bringing up their liquidity, bringing up their capital, and having risk management plans in place. So the banking system, seems to be in good shape.
Chris.
Thanks. Chris Rugaber at Associated Press. I was wondering if we can, on inflation, if you can tell us a little more about where you see inflationary pressure in the economy. You mentioned labor markets coming into better balance, and inflation expectations appear to be well anchored. You're seeing, anecdotal stories of the large chains like Walmart and Target are announcing price cuts. McDonald's announcing a $5 meal deal. So, people may still be unhappy about prices at the grocery store, but it doesn't seem like there's a lot of inflationary pressure left in this economy. I wonder if you could tell us more about it.
I think it's true that inflationary pressures have come down, but we're still getting high inflation readings. So, and I think you can see it in various places. In some parts of non-housing services, you see elevated inflation still, and that's probably it could be to do with wages. Goods prices have kind of fluctuated. There's been a surprising increase in import prices on goods, which is kind of hard to understand, and we've taken some signal from that. But and of course, housing services, you're continuing to see high readings there. To some extent, that's catch-up inflation from earlier pressures. But I mean, overall, you're right. Inflationary pressures have come down. As I mentioned, the labor market has come into better balance. Wages are still running, I would say, above a sustainable path, which would be that of trend inflation and trend productivity. You're still seeing wage increases moving above that. We haven't thought of wages as being the principal cause of inflation, but at the same time, getting back to 2% inflation is likely to require return to a more sustainable level, which is somewhat below the current level of increases in the aggregate.
Rachel. Hi, Chair Powell, Rachel Siegel from the Washington Post. Thanks for taking our questions. There's obviously a lot of focus on how many cuts could be expected this year, but can you give us a sense of what one cut by the end of the year would actually do to the economy, what you think would be a meaningful difference if there was a cut by the end of the year, or even two?
I think if you look back in 5 or 10 years and try to pull out the significance to the U.S. economy of one 25 basis point rate cut, you'd have quite a job on your hands. So that's not how we look at it. Really the whole rate path matters, and I do continue to think that when we do start to loosen policy, that will show up in a significant loosening in financial market conditions, and the market will price in what it prices in. I have no way of saying, we're not at that stage, so I don't know what we'll be thinking about at that time. But it's a consequential decision for the economy, and you want to get it right. And fortunately, we have a strong economy, and we have the ability to approach this question carefully, and we will approach it carefully while we're very much keeping an eye on downside economic risks should they emerge.
And you've been talking about this clear sense that it's just going to take longer to have the confidence that's needed for rate cuts. Is there something about what happened in the first couple of months of the year that you're seeing differently now with more time or hindsight? Do you still characterize it as expected bumpiness or something more lasting that is affecting your policy for the rest of the year?
We always want to avoid the tendency to dismiss the parts of inflation that we don't like and just make it go away. But we had a quarter where inflation was running higher, and yes, I could stand here and say it's stuff we shouldn't have taken signal from, but it is what it is. You have to, low inflation is low inflation, high inflation. So if you have a quarter where it's higher, We tried not to take signal from the first couple of months, but we got a third month and we said, okay, the signal we're taking is that, we think it's going to take longer to get confidence that inflation is moving sustainably on 2%. That's what we said. I think that was the right thing to do. I still think that's the right thing to do. Now we have today's inflation reading, which is very different, very much more positive. We're going to have to see what the trend is, what's going to be the data going forward. We're looking for something that gives us confidence that inflation is moving sustainably down to 2%. And readings like today's, that's a step in the right direction, but one reading isn't. It's only one reading. You don't want to be too motivated by any single data point.
Jolene. Hi, Chair Powell. Thank you for taking our questions. I'm Jolene Kent with CBS News. What's your message to Americans who are seeing encouraging economic data but don't feel good about this economy?
I don't think anyone knows, has a definitive answer why people are not as happy about the economy as they might be. And we don't tell people how they should think or feel about the economy. That's not our job. People experience what they experience. All I can tell you is what the data show, which is we've got an economy that's growing at a solid pace. We've got a very strong labor market with unemployment at 4%. It's been a long time since we've had a long stretch of time with unemployment at or below 4%, very long time. We had a period of high inflation. Inflation has come down really significantly, and we're doing everything we can to bring that inflationary episode fully to a halt and fully restore price stability. We're confident that we'll get there. And in the meantime, it's going to be painful for people, but the ultimate pain would be a period of a long period of high inflation. It is people who, lower income people who are at the margins of the economy who have the worst experience, who experience the most pain from inflation. So, it's for those people, for all Americans, but particularly for those people that we're doing everything we can to bring inflation back down under control.
As just a quick follow-up here, you've indicated one interest rate cut sometime this year, and I know you don't have a crystal ball up there, but a lot of people are watching and see, borrowing money remains very expensive. For everybody who's out there waiting on a rate cut, about when can consumers expect some relief?
Well, I don't have a precise date for you, but what we said is that we want to make sure that we're confident that inflation is actually moving back down to 2%. And when we are, then we can look at loosening policy. So having that kind of confidence that inflation will be at 2%, it just pays benefits to the whole economy, to all Americans for a long period of time. We had that period for a very long time. We very much want to get back to a place where people can not think about inflation. It's just not a concern in the everyday economic decisions that they make. We were there for a long time, and our goal is to get back to that place. And we've made good progress, and we're in the phase now of just sticking with it until we get it done.
Claire.
Claire Jones, Financial Times. Just drawing on the change in the statement on there being modest further progress on inflation. Halfway, through the year and after today's CPI release, what have you and other committee members found that has been particularly encouraging to you? And just in terms of the conservatism, how much of that is about stickiness in shelter inflation in particular? Thank you.
So encouraging has been that growth, the growth clearly that we had last year, and particularly the second half of last year, and we continue to see still strong growth or solid growth this year. That's been very encouraging. If you go back a year, there was a real concern about, very much slowing growth and a recession. Many forecasters had that. And that's not what happened. Instead, the U.S. is, anyway, and it's in sharp distinction with many other advanced economies around the world. So that's been encouraging. I would say that today's inflation report is encouraging, but it comes after, several your reports that were not so encouraging. You ask about, your second question was really about shelter inflation. So I think if you go back a couple of years, we know that there are renters, and then there are people who own their houses, and we have OER, which is owner's equivalent rent. And so when market-based rents go up sharply as they did at the beginning of the when the economy reopened. They really went up sharply. Those play into rollover rents much more slowly for existing tenants than they do for new tenants. And so we found now that there are big lags. So there's sort of a bulge of high past increases in market rents that has to get worked off, and that may take several years. Nonetheless, as long as market rents are going up at relatively low levels, and they still are, this is just going to happen. It just is going to happen more slowly than we thought. We also do sort of this thing where we impute a rental value to owned homes, and that's many countries around the world do that. Some do it differently than us. It's something that the pricing experts have regularly looked at. It is not something that we're the only country that does, and it's not something we're looking at changing or would look at changing, anytime soon. But it's true. It's one of the very hardest things in inflation and in prices is how to think about, the services that someone is getting by living in a home that they could rent, but they're actually living in it. And some countries choose to just ignore that, but that's not how we do inflation here. We do it the way we do it, and we've been very transparent about it. And it's true that we're seeing delays in realizing what's happening economically, but we understand that. We understand that very well.
Edward. Edward Lawrence with Fox Business. Thank you for taking the question, Chair Powell. So I want to go back to jobs and the consumer. The last jobs report showed that over the past year, 634,000 more people took multiple jobs. That's up 8.2%. And since January of 2021, we've seen prices rise 19%. So people are using their credit cards to pay for their lifestyle. What pressure points will signal to you that the slowing economy could maybe break companies in terms of hiring or break the consumer in terms of spending?
So, we monitor all the things you mentioned and more. What we're seeing is basically spending was going up faster than disposable income during big parts of last year rather. And so what you'd expect to see is people spending more on their credit cards. That has been happening. Credit card balances have been going up. Credit card defaults have been going up. They're not at high levels. Remember that after the pandemic, people were cooped up. They couldn't spend money. They couldn't go out to spend money. They could spend money from home. But households were in very, very strong, historically strong financial shape. They've now worked off a lot of that. So we're watching that carefully. And, what do we see? That's what we see. We see the same data that everybody else sees, but you've still got household sector that's in pretty good shape. But nonetheless, it's not in the kind of shape it was in a year or two ago. And we're carefully watching that.
So how close then are we to that point where the consumer can't continue to spend as they're spending, or companies can't hire like they're hiring?
Consumer spending is still growing. It's not growing at the pace it was growing at a year or so ago, but it's still growing solidly. And by the way, other parts of the economy are picking up. Spending on equipment and intangibles has picked up quite a bit in the wake of all the construction that we saw of new tech plants. So overall, the economy is exhibiting solid growth, and something around 2%, which is a good pace of growth for the U.S. economy. But you're right though. We do see the same thing other people see, which is increasing financial pressures on more lower income people, and the best thing we can do is to foster a very strong jobs economy, which we think we have done. Ultimately, to get inflation under control, because those people experience inflation, very directly, very painfully, and once we get inflation under control, rates can come down, which will also improve things.
Victoria. Hi, Victoria Guido with Politico. You've mentioned that an unexpected weakening in the labor market would bring rate cuts sooner, and I was just wondering, can you talk a little bit about what that would look like? Is it more of like a quicker pace of people losing jobs? Is it more the level of the unemployment rate if it were to start to go above 4.2 or something like that? How are you thinking about what you're looking for to see the job market unexpectedly weaken?
when I say unexpectedly, the first thing is more than kind of is in our forecast or in common forecasts. So something more than that. But we'll be looking at everything. The labor market, has the ability, has the tendency sometimes to move and to weaken quickly. So waiting for that to happen is not what we're doing. We're watching very carefully. We're looking at the balance of risks. I always point out the balance of risks. So, and also the fact that we look at all of the whole situation. So, a decision to begin to, loosen policy could have several reasons associated with it at a given time. But I would just, we monitor all the labor market data, and if we saw troubling weakening more than expected, then that would be something we'd consider responding to. But we look at the broader context of what's going on too.
So something like negative payroll numbers would be.
I'm not going to. I can think of things that many things would make it on that list, but I don't think I'll butter them here.
Thank you, Chair Powell. Simon Urbanovich with The Economist. May I ask, you mentioned with the slightly higher PCE readings earlier this year that it wasn't 1 or 2 months, but 3 months that tipped you to be a bit more cautious in the rate outlook. Should we take from that it looks like May will be quite good for PCE as it was for CPI? Does that imply that kind of 2 more good months would reinstill the confidence that rate cuts could be coming sooner than you currently project?
I don't actually have that kind of mechanical thing in my thinking. I get that. As many good ones as we had bad ones, but no, it's not like that. It's the whole. It's going to be the totality of the data, the labor market data, the growth data, in terms of inflation.
As he speaks.
You'd want to see real progress that builds your confidence that we are on a path down to 2%. And I don't want to try to give you specific numbers of things because that points to dates, and I just don't think we're not at a point of being able to do that.
Something we need to keep in mind as well. Okay, guys.
Thank you for doing this. I'm Kosuke Takami with Nikkei. I would like to know about the impact of stronger dollar on U.S. economic growth and prices. And I have no doubt that the market should determine the exchange rate, but Japan and some emerging markets are suffering from the strong dollar. So I want to know if it is having a positive impact on U.S. economy in total. Thank you.
Market's heading higher now at 543.62.
Actually, it's our finance ministry, the Treasury Department, that has a responsibility for thinking about and if it sees fit, doing things about the level of the dollar. So for us, it's just another financial variable. And you're right, the dollar has been has exhibited some strength over the course of the last year or so because the U.S. economy is very strong. We don't think of it as benefiting or hurting the U.S. We don't manage the level of the dollar. That's not our job. It's not, and for our economy, what we're trying to foster is maximum employment and price stability, and we feel like we've made good progress on both of those goals over the course of the past year.
Jennifer. Thank you, Chair Powell. Jennifer Schonberger with Yahoo Finance. You said you would cut rates before inflation falls to 2%. You're forecasting inflation to end the year at 2.8% on core PCE, or at 2.8%, of course, on core PCE. Right now, you said the inflation forecast is conservative and that if you got 2.6 to 2.7 on PCE, that would be a good place to be. You also indicated the job market has mostly normalized. So why not cut rates this summer just once, you're well above neutral, to try to preserve the soft landing rather than risking waiting too long in the quest for confidence for inflation?
All right, that's a good question.
So we're well aware of the two-sided risks here. Let me just say, we understand that if we wait too long, that could come at the cost of economic activity, of employment, of the expansion. We understand that if we move too quickly, we could end up undoing a lot of the good that we've done and have to then start over, and it could be very disruptive. So we're extremely aware of both of those risks and just basically trying to manage them. And what we said is that we don't think it'll be appropriate to begin to loosen policy until we're more confident that inflation is moving down to 2%. over time on a sustainable basis. That's kind of been our test. Or there's another test, which is, you know, an unexpected deterioration in labor market conditions. So I think that's the right way for us to think about it. That's our dual mandate there. And you know, we have a strong economy. We've got growth. All forecasts are very commonly around 2%. That's a strong growth rate for our economy. The labor market continues to print jobs at a pretty high rate. Unemployment's still low, so we have the ability now to approach this question carefully, and that's what we're doing.
Just to follow Chair Powell, do you need to be ahead of a weakening in the labor market? Otherwise, is it too late, given that the labor market is a lagging indicator, right, when you look at the monthly jobs data?
Yeah, we completely understand that that's the risk, and that's not our plan, is to wait for things to break and then try to fix them. We're trying to balance these two goals in a way that is consistent with our framework, and we think we're doing that.
Evan. Market now at 543.66 and climbing on
Thank you,
volume.
Chair Powell. Evan Reiser with Market News International. You have mentioned before the framework review process will start in the latter half of the year. At this point, do you have any specific time frame for the start of that? Who will lead it? Will it be you or a committee group of your peers? What will be the parameters? Do you anticipate the review will consider changes to communications going forward?
So what we've been thinking is that we would announce and commence the review later or late in the year. In the meantime, as that time approaches, we will be devoting a lot of careful thought and planning to the contours of it. Within scope would certainly be communications generally. I'm not going to say that we'll look at this or that particular thing, and all the other details. We don't want to get prematurely into a conversation until it's really time to have it. And so, I'm going to leave pretty much everything else to later in the year.
Go to Nancy for the last question.
Last
Hi, Chair
question.
Powell. Nancy Marshall-Genzer with Marketplace. Just one more question on housing. Can you still cut rates with shelter prices high, or will you wait until they start to moderate a bit?
I wouldn't. There isn't any one variable like housing prices moderating that would really decide against what we're doing. We've got an overall test, which is greater confidence that inflation is moving down to 2% on a sustainable basis. That's our overall test. Or alternatively, we see unexpected weakening in the labor market. So those are two different tests. I would say, we're not looking at any one price in any one sector and saying that's the one. We don't target housing prices, for example, and we don't target wages. We target aggregate prices and overall employment. So.
But if housing prices remain sticky, could that slow down the pace of rate cuts?
I think you'd look at we'd be looking at the aggregate numbers and asking ourselves what's going on here with inflation at the aggregate level.
Markets
and of course,
new all-time highs for the S&P 500.
Any price that contributed to ongoing inflation would matter. Any price that contributed to ongoing disinflation would matter too. But I wouldn't single out housing as having a special role there. Thank you very much.
And that'll be all for Papa Powell. Papa Powell, Ol Papa P, thank you so much for joining us today. Do appreciate you. We just hit new all-time highs right there at the end of the meeting. That's showing that we are very fruitful, guys. So awesome. Dark Thunder, finally. I knew you were going to join, brother. SPY definitely closes about 541.33. Well, yeah. I mean, it may come right back down. I hope you voted on the poll. If you guys enjoyed that, I appreciate you. I appreciate you being here with me. I see you hitting that love. While you're here, just since the meeting's over, before we continue on the closure, I would like you to smash this like button. Hit the subscribe button if you haven't already. We're up to 864 subscribers, team. This is absolutely amazing. We're growing so damn fast. I love to see it. So, and if you haven't already, join our Discord. It's absolutely free. We're going to be going over this all tonight at 9 o'clock, and it looks like dark. It looks like you were getting a pullback right after you said that. What, did you just sell out of everything? You know, goodness gracious, dude. You joined the chat and then you just decide to sell everything? No, but no, seriously, man. Yeah, Tesla set up like crazy. Yeah, let's take a look at Tesla. I've really been wondering what Tesla's happening. Yeah, set up beautifully. I'm waiting for a pullback on that VWAP. I'd love a VWAP bounce, but to be quite honest, it's up twice its average daily range today. So it's hard for me to want to take this, but it had this beautiful trend breakout today. So, you know, I had a little bit of that FOMO up here at the top, but, you know, we don't like to play with FOMO. We like to make sure that we're playing the right trades at the right time. And the breakout area was more at 176.72. Right in this area was the breakout area. But where was the volume today? We had a little bit higher volume on that breakout trend in Tesla, so that's nice to see. But, you know, in actuality, you know, if we look at the overall market, we are doing very, very well. And, you know, the questions that Papa Powell had, they were given to him, we'll just go over a few of these. He's saying, you know, pre-pandemic, we were at 7%. 7%, okay? Yes, actually, Dark Thunder, the liquidity sweep, actually, I was just talking about that in our Discord. Dark, I don't know if you're a part of our Discord or not, but you really need to join. It's Dan, Bob, Dan, the greatest moderator alive. You know, I would love to have you in there. I would love to have you in there. It seems like you, we kind of think close to the same. The liquidity sweep below 170. I was calling that out. I actually texted a good buddy of mine. You know, he said, you know, he would like to see it rise, blah, blah. I said, well, I think that there's going to be a liquidity sweep, you know, below that, you know, and, you know, he said, well, I think the liquidity sweep already was there. You know, let's bring up Tesla. Let's go over this. Okay, so, you know, there was already this liquidity sweep right here at 172. And I just thought, you know, maybe we'll get one more good one because it was just setting up. It was too picture perfect, you know. So then we got this liquidity sweep that just came just below all of that. I mean, it literally came just below this whole basing scenario, right? Cleared them out and then rip, tater chip to the north side. So yeah, even though we're below this 200-day moving average, which I always say, nothing happens good below a 200-day moving average. This setup is epic. It looks beautiful, and we're getting volume, above average volume now towards the end of the day on this breakout. So I don't want to miss my opportunity. Maybe I take a small bet, but yeah, volume tomorrow should be good with Elon's pay package vote. Yeah, we'll see. You know, that'd be cool. You know, I do like it though. And I like where you're coming from. It's definitely one that we definitely want to keep our eye on. Now, let's take a look at the S&P 500, guys. And as we had a vote on the poll, this is absolutely crazy, guys. Look at the volatility. You know, after Papa Powell hangs up his mic, we're heading right back down here to that 541.34. After the CPI index came out, we launched right back up here and we opened at that 541.33. And now we are coming back down to this area. Might we bounce off of a trend line here? Maybe, maybe not. Like I said, these ETFs are a little different because we're going on a lot of different things. But regardless, I would love to see it hold this whole gap, you know. And now the market doesn't give a shit what I think or what you think, but we're going to see. We'll see. Does it want to hold this gap from today? Will it continue to head higher? I would love to see it, obviously, because I'm risk on, baby, as long as we stay above that 10 and 21-day moving average, as we clearly are as we gapped up from yesterday. Most likely scenario for me, for the best bets, would be to see the S&P 500 trade sideways for the next 3 or 4 days and let these moving averages catch up to it. That's what I would love to see, okay? Now, is the market going to give it to me? We'll see. You know, I have no idea. But I will say this, guys. That was a beautiful meeting. I love what he went through. He was talking about how pre-pandemic we were at 7% inflationary rate. And now, after all this correction, we're at 2.7%. He is still staying the course when he says we are still too high. We are still too high. Why? Because he wants to bring it down to that 2%. We need to bring it down to 2%. Okay? He says conditions are back to normal for the job labor's market pre-pandemic, meaning we had this huge lack of labor. Then we had a huge people coming in from over the border. It's filled a lot of those jobs. So now we're about back to normal for that pre-pandemic. right? Pre-pandemic, and now it's close to that same normality. So that's good. I'm probably going to have to do a YouTube short because, again, he said the same thing a couple meetings ago where he's not confident in inflation continuing to come back down. So he kind of like spread that fear out there. But when it comes to like hawkish or dovish, I would say it was a little bit of both. You know, now with the questions, he sounded a lot more dovish, at least confident. He sounded very, very confident in what he was saying. So it was very nice to see that. Market sitting at 541.09 right now, 541.09. So the inflationary pressure is coming from where? I thought this was a really good question. Where is the inflation? Because he's saying there's still inflationary pressure. So people want to go, well, where is that inflationary pressure? You know, Stephanie Swan says, shoot, I'm going to buy a Tesla 170 put. Tesla always falls. Yeah, Tesla does always fall. We've been watching that over the time. So just be careful with that, though. Make sure you have proper risk management on that, Stephanie Swan. But yeah, no, I totally understand. Every time we would get a pop from Tesla, it would retrace. But now what Dark Thunder is saying, and I have to agree with him, is that we had that liquidity flush where it flushed out, it flushed down hard and fast, scared most of your investors out, and then it's ramping right back up. So you're going to get not only the people that have the fear of missing out, the people that said, oh, you know, I was playing this, so they're buying in, but we also have a beautiful trend break as well, so it might have that continuation higher. But no, I totally understand, Stephanie. We have been seeing a lot of fake breakouts with Tesla, so that might be part of it too. So where is the inflationary pressure coming from? Well, he's saying not only is it goods prices, but import prices are seeming to having a big issue on this. Housing services and non-housing services. So and the only other thing he was saying was wage increase. Wage increase was having a huge issue with the inflationary data that's coming in. And what I find is very interesting is I don't see the wage increase coming down. Now, I could be very wrong. I'm not an economist, but with the rate of, you know, everything becoming more expensive, the wage rate started to increase too. Now that we're filling all those jobs, we might get lower wage increases, or they might finally start to pan out. But I don't see them coming back down to normal. You know, I don't see them coming back down, you know, to, you know, you're making $10, $11. I don't even know what it was before pre-pandemic, but I don't see somebody flipping cheeseburgers anymore for $10 an hour. You know, I think it's going to be, your average is going to be 12 to 14, at least in my area. I know every area is different, but with that wage increase, he's saying is also what is also helping raise that inflation. So that's kind of a hard one with the wage increases. How are we going to have to get the wage increases to come down? Well, if you're making less money, you have less money to pay for things. You know, it's still not going to be great for the overall economy. So I don't like the answer on that wage increases is causing more inflation, although it's obviously that, you know, it's obvious that it is. You know, it really is. It's obvious that higher wage increases cause more money, so more money increases spending, more spending increases inflation. So it's going to keep sticky inflation around. So yeah, wage increases are going to, but then we have to reduce it somewhere to get that sticky inflation down to 2%. Now, something I brought up in the meeting was, guys, look at this. Look at the CME Fed tool. We were at 64% of the Fed rate tool in September, 64% chance of coming down a quarter of a rate hike. And then after we came out and we started chatting with old Papa Powell, my special guest, we then started seeing that it was at 58.2, so it actually came down a little bit here, okay? But we still have a very likely chance, a much higher chance than a rate stay in September. So it does look like we are still projected to come down a quarter of a rate point in September, but it's not as high as that 64%. Now, we are having a 5.3% likelihood of coming down a half a point. So that's actually nice to see that come up on the chart. Because if we click on November, you'll see we are very likely, you know, we are less likely to be at a rate stay by November. We have a more likelihood to actually be a half a point down by November. okay? So keep that in mind, guys. It's still looking very positive here, but I do want to point out that that Fed target rate of a quarter rate point in September actually came down just a fudge as he was chit-chatting on that microphone. So that might be a small piece of bad news. And now the S&P 500 is trading at 540.77. We are actually just lower now. So in our vote poll, and it's 3:33, we're going to close this at 4 o'clock, but we asked, will the market end above or below its open price of 541.33? Above, 48% of you said, 39% said below, and 13% of you said this ish is bananas, B-A-N-A-N-A-S. Now, what I will say is we were looking very healthy, very strong, holding that red to green area at 541.33. Now we are below it at 540.94. So beautiful call out there, Dark Thunder. Dark Thunder also says Tesla's weekly 21 moving average at 179 area break of that Tesla should be good for a move higher. If it repeats the weekly 21, then we could go lower at 177.90. Yeah, I got you on that. So if we bring up Tesla, and we won't stick on Tesla for too much longer, guys, but if we look at Tesla and we bring up this weekly chart, here is the daily right now, and you can see huge downtrend here. If we bring up the weekly chart, which is always nice to see, you can see that that 190 he's talking about is right here in this area. You can see the last time we bounced up, he's looking at that 190 area, and it ripped right back down following that 30-day weekly moving average. We might pop right back up and see continued movement to the south side. And what I always say is, look at the 200-day moving average. It's breaking down. Nothing good happens below this 200-day moving average. I like to see prices above a rising 200-day moving average before I even look at it. Why? Well, because I'm a momentum trader. If we look at Tesla on the charts here, we can see that Tesla has an RS rating of 22. That's not something that I like to mess with, but I do like to look at this chart because I do like those trend breaks. So that's why we keep bringing up Tesla. That's why we keep on looking at it, because everybody loves that Elon Musticles, you know, including myself. I think he's a genius, and I think what he's doing is absolutely amazing. So let's go ahead and take a look at my charts to see where I'm at. So AMRX having a nice pullback. We're still up roughly $69 on this. Abercrombie and Fitch reached those highs, but then had a pullback, so we're up $1,393 on Abercrombie and Fitch. ASTS, we had a nice pullback today after pushing up yesterday. Traded sideways for a while, broke down, popped back up, breaking back down. We lost about $74 on the trade today, but overall, we're still up over $600 on this trade. FSLR looked like it was following the market pretty closely here, as we are right where we opened at. We're up about $164 on this trade. And then, of course, NVIDIA. NVIDIA had a little bit of a pullback there after the meeting, but overall, we're up $107 today on NVIDIA. Overall, on the last 7/8 of this trade, I'm still up $560. We made a killing on NVIDIA and playing that momentum to the north side. So NVDL, we bought in around $50, $50.09, and it's trading at $72.74. We took off a lot of our shares on the way up, but we're letting this last piece ride until it breaks that 10-day moving average. And of course, I have a long-term account. If you guys remember, I have been buying this long-term account all the way back from in here. Then my wife kept handing me money. She wants me to keep investing money. So we decided on this pullback, we added in money. And I just like to show you guys the long-term investment strategy of things, because yes, it's nice to swing trade, but when you have extra money and extra capital, it's nice to dollar cost average into the market. And that's just what I did on this pullback. We added a few shares, couple more shares down here, couple more on the way back up after it bounced off. And then when we broke new all-time highs, we locked in another 10 shares. So we got, we're up. Actually, let's just take a look. So we started doing this on this pullback last month. Actually, 2 months ago exactly is my first buy-in area, 2 months. And we're up on 16 shares. We're up $329, guys. So it's looking really, really good for the investment strategy. We also own VTI. I don't have where I bought every piece of VTI, but we're up $413 on VTI. We own about 18 shares of that. Those are my two investment strategy vehicles on this chunk that I have. Of course, I have, a state pension, and I also have, a financial advisor that also holds a lot more of my money. I'm not trying to mess with all of it. I just keep a nice chunk out to swing trade with, to do this YouTube videos with and stuff. So if you guys want to learn how to dollar cost average in and stuff, we can go over all that. But none of this is financial advice, of course. It's just a big talking head on here, chatting with you about what Papa Powell had to say, what I like to buy, what I like to sell, things that set up. We also go through live trades. We do live commentary. We bring you the data. We brought you the CPI index this morning. And guys, the CPI came out very, very nice. Very less strong than what it was. The consumer price index was a lot lower, so that was nice on the overall market. And it just shot the S&P 500 overnight. It went launching to the north side. It was nice to wake up and, well, not wake up. It was nice to see after 8:30 that data dropping, to see that P&L rising skyrocket. Now we are trading at 541.15. We're teetering right at that area where we asked that question. 541.33 was the question. We're sitting just below it. And then the question was, will the market end above or below its open price of 541.33? We had a lot of you vote on it. We got about 23 votes on that. That's pretty cool. But while you guys are here, if you do me a huge favor, hit that like, hit that subscribe button. We have 22 likes. The whole goal today was over 30. We want to get over 30. So if you haven't already, hit that like, hit that subscribe button, guys. We're not here for too much longer. If you guys want me to take a look at a ticker, or you want me to analyze anything to the best of my knowledge, please throw it up in the chat. Don't throw up, but throw it up in the chat. I love to keep things well established around here. Make sure that we are paying attention to our subscribers, to our users. And keep in mind too, guys, tonight in the Discord, we are gonna have a meeting at 9 o'clock. We're gonna go over everything very quickly, and then we're gonna run through my charts to see if we have any setups, since we are getting a little bit of a pullback, but not much, obviously, because of the CPI gap up. It's nice to see how well this did, so. We got the lo-fi music playing. Hopefully I didn't have that playing during the meeting. That would have been bad. Papa Powell will get mad at me. But yeah, guys, everything's looking really, really good. I could go through a few of these trades as well, actually. Let's start from the bottom. So I was looking at a firm today. I tried to take a trade in a firm. Lost out on that one just a little bit. $95 loss in this. It was a little too extended. That's why I only took like 1/3 of my share size in this, because it was extended. But look at this breakout here, guys, on the daily. Look at this beautiful breakout too. This is a very strong relative strength stock. I think it's still in the 80s though, so a little bit longer. It'll be back up in the 90s. But look at the volume here on that breakout. So it's really nice to see. I'd love to see this start to form another trend, a trend above a trend, or maybe even a base breakout here right at this 37.50 area, and we'll see if we can find a place to get in. UPST, much weaker stock though, didn't actually have a breakout. It tried to have a breakout, but it did not. Of course, IREN, if we're gonna look at IREN, we have to look at Bitcoin. Bitcoin's doing well today. It's still below that 67,500 area. We want to see this thing hold this area. I didn't want it to break its 10-day, but it did. Now holding the 50-day moving average, maybe a little bit more time's needed before it actually breaks through that 72,000 and continues to the north side. That would be nice to see. Let's take a look at AMZN. So if we look at AMZN on the daily, you can see I have the murky waters right here. What are those murky waters? Well, let's look back here. It's the the support and the resistance from all the way back here. So if we come over here, we can see it's back here. Ooh, that doesn't look good. This is a head and shoulders pattern forming up on AMZN. And as you can see, when we came back up, here's the shoulder, here's the head, here's the shoulder. Now that might not mean anything to you if it creates new lower highs, but as long as we can stay above and out of these murky waters and use this as more of support, support rather than resistance when we get below it, I think AMZN could have a chance to continue higher, but these are my thoughts, they're not yours. We're going to see if AMZN wants to hold maybe one of these moving averages like it did before. It likes to follow that 10-day moving average. Maybe that 10 and 21-day moving average start to line up a little better. The 50 gets below, or the 30 gets above the 50, and we see everything start to work out and we start to trend to the north side. It's been a while since AMZN trended after we got to new all-time highs. It's just kind of chilling here now. I would say long-term rise, right? Long-term big rise, okay? But short-term, this thing has been heading down. So we're gonna see it's above all these moving averages. Things are looking fruitful. I do like AMZN, but keep in mind, Amazon's a very slow mover, very slow. It only moves 1.8% ADR. I'm looking for much faster things like IREN. Okay, this thing moves 13% in one day. BNAI, 44.5%. Look at this. Look at this beautiful trend break that could possibly happen very, very soon. I would love to see a trend break on this because, you know, at 44.5, brand and engagement might actually start heading to the north side very quick. It's also a more recent IPO, so that's nice to see. And also the moving averages. It's following this 10-day moving average. That is what I'm looking for. Now we have let's just go through these. I was looking at some smaller time frames. Of course, we can look at GME. GME had a nice pullback today. We'll see if it wants to hold that 30-day moving average or not. CURV, it looked like it tried to break out, but then found the resistance. It also had earnings. It looks like, well, aftermarket today. Aftermarket today. So CURV, we were keeping an eye on that. That was pointed out by the greatest moderator alive. It moves 5.1%, so we'll see. And we're gonna go over a lot of all of these tonight. So you guys stay tuned for tonight. We're definitely gonna go over all this. We're gonna end this poll though today. Let's go ahead and take a look at the poll and see exactly where we're at on the S&P 500. So the S&P 500, we are sitting at 548.60, okay? So we are below. So we actually had 47% said that we would finish above that price, 39 below, and 13% said this ish is bananas. So guys, just before I take off, do me one more solid favor. I'll hit the refresh on this. Hit that like, hit that subscribe button. We will see you tonight in the Discord. So hit that like, hit that subscribe button. If you need to know where to join the Discord, well, it's in the description. So click the description down below. I'll show you right where that's at really quick before I take off. You click this more button, you scroll on down, you click this link tree, bada bing, bada boom, here's the Discord. You can find me on YouTube, Discord, Instagram, TikTok, Facebook, and Twitter. We are on all platforms, guys, and we are constantly growing. So if you want to be an OG, you're more than welcome. You're more than welcome to join that free Discord, okay? Dark Thunder, Roberto Tanish says, thanks, David. See you tonight on Discord. Yes, sir. Thank you for joining the Discord, and I'm glad to see you were in here the whole time. You can tell that you really want to better yourself, man. It's good to see people that are ready and willing to learn. Dark Thunder said the market really dumped after, after that, said it would stay above. Hang on. I can't read the heart because the heart's in the way. Oh, after I said it, I thought you said it was going to go below. But yeah, no, Dark Thunder, yeah, it really tanked. But yeah, no, it did pull back. You know, you did say it was going to pull back to that area. I will hold you to that. And I did not think it was going to pull back that hard, that fast, but it did. And you know what? By the end of the day, it might get back above. You never know, Dark. But I hope to see you tonight in the Discord. I would love your insights and your thoughts. Jimmy Bright says, thanks, guys. See you tonight. Jimmy, much love to you, homie. I know you're going to be there tonight. You never miss a meeting. B. Stewie, thanks, brother. Yep, see you tonight, brother. Stephanie Ross, thank you, Lo-Fi. Hey, you remember me as Lo-Fi? Hell yeah, love that. That's an OG right there. Stephanie, we'll see you tonight in the Discord. If you are not already joined, make sure you join. We'll see you then. Guys, let me hit you with the outro. Thank you so much. I appreciate everybody being here tonight. We will see you at 9 p.m. Peace.